Thank you very much, everyone, for coming, and welcome to our program this afternoon. I'm Melissa O'Sullivan with the Danube Institute, and on behalf of my team here, Istvan Kiss, Executive Director, Katyan Naj, Adam Gurnj, who helped with all the logistics, and our media team, and part of which you see right here, cameraman Mate. Welcome, and speakers who've come from far and wide to be here, welcome. We were just having a discussion about which number of the Budapest Free Market Roadshow this was. I was thinking it was 10. Barbara says maybe 11 or 12. So we've been doing a joint program with the Austrian Economic Center, founded by fabulous Dr. Barbara Colm in the front row, who you'll hear from shortly, over 10 years. And it's our delight to be their partner here in Budapest for the Free Market Roadshow, which hits 28, 30 cities all across the world, discussing the beauties of free market capitalism. Now, we're going to have a number of speakers, and then we'll have a coffee break, and then we'll resume with more programming. So we hope you can stay here with us for the balance of the day. It will be a very interesting program. In this, which is the 20th anniversary of the Free Market Roadshow, this is also the 200th anniversary of the publication of Adam Smith's The Wealth of Nations. And I will just read one quote from it. And this is for the young people in the room or those who will listen on the video. If you haven't read this book, you really should. So much of education now is open to all of us. It's not confined to a schoolhouse somewhere. So I would hope that you would continue to self-educate if you've not been exposed to this, because it's very powerful. And this is one quote from Adam Smith's The Wealth of Nations. On self-interest as the engine of cooperation. Book number 1, chapter 2. It is not from the benevolence of the butcher, the baker, the brewer, that we expect our dinner, but from their regard to their own self-interest. We address ourselves not to their humanity, but to their self-love, and never talk to them of our own necessities, but of their advantages. And there's so much wisdom in that very simple statement, and so much of being answerable to the market is the greatest driver of creating wealth that there is. No government can do what the invisible hand can do, which is another quote from talking about the invisible hand. Maybe we can get to that one later. But we will begin our program now, and Dr. Colm, will you come and share a few opening remarks?
Well, ladies and gentlemen, thank you very much, Melissa. As a matter of fact, when you and John moved here to Budapest 13 years ago, we had not collaborated with the Danube Institute, but we were collaborating with the Andrássy University here with the Free Market Roadshow. But trust me, ever since, our collaboration has been growing and growing, and it's not only just this one single event for the Free Market Roadshow that we work together. We work together on publications, exchange of students and programs throughout the entire year. So it's not only the single highlight that we collaborate and divide labor, as the Austrian school tells us to do, but we also do that throughout the year. And it is a pleasure to have this 250th anniversary, not only of Adam Smith that Melissa just quoted, but it's also, since we're touring the United States as well, looking at the other side of the pond and the United States and what has happened over there in the last 250 years. Where have our constitutions gone? And I remember very well the debate of the founding fathers and the famous letters that between Tocqueville and others, what is the right way, what is the right framework that needs to be done. And if we look these days at our constitutions, especially if we look at Europe, at the European Union, where we have gone with tons of papers and contracts that sometimes we don't even stick to. Just remember the Maastricht Treaty and the Lisbon Treaty. We should probably look back at what our founding fathers on both sides of the continent can tell us or could teach us. And there is another anniversary that I would like to recall you. It's Hayek's 66th anniversary of the famous book that Lady Thatcher slammed on the table when she was forming her first government, the Constitution of Liberty. And I think that is something that we also need to take into consideration when discussing what is currently going on in this turmoil that we face globally, but also on our continent. Where do we have the right answers to all those challenges? And I keep saying, well, there is a good reason why the Austrian School of Economics was founded and why Karl Menger taught us that supply and demand are truly our guidelines, and why entrepreneurship and taking risk is in the hands of us individuals who think and act, instead of the anonymous government far away that doesn't know what our needs definitely are. And there is another thing that we should keep in mind, especially talking here in Europe: subsidiarity. This ties in very well with the local need and the local demand of what we individuals know, and this is also something that Hayek has taught us. Just remind you, last year we celebrated the anniversary of his, actually 2 years ago, we celebrated the anniversary of his receiving the Nobel Prize in Economics. And his famous speech, "The Pretense of Knowledge," is more true today than it was even back then. So maybe taking a step back, looking at what we can learn from not only the Austrian school, but from the wisdom of those great economists and scientists that have proven that markets work. And there were also some politicians who did that, and I'm just only naming two, Thatcher and Reagan. We should come back to those wisdoms and look into our program today, and we have a variety of great speakers. Thank you, Melissa, for inviting them and for making sure we get our international guests here. And without further ado, I just hand over to the first speaker, and the microphone is yours. Thank you.
We can ask Carter Lacroix to come forward. Carter is the founder and CEO, American Values Investment, and he's also a board member of Danube Institute, U.S. So, Carter, the floor is yours.
Thank you. Thank you, Melissa, for that kind introduction, and thanks to the Danube Institute and the Austrian Economic Center for sponsoring another free market roadshow. Hey, that's right. It's a good thing. Good morning, ladies and gentlemen. I'm delighted to be in the beautiful country of Hungary, and I bring greetings from the United States and the great state of Tennessee, home of President Andrew Jackson, Sergeant Alvin York, who captured 132 prisoners in World War I, and Congressman Davy Crockett, who fought at the Alamo. On a sad note, let me see if I get this right. Yes. On a sad note, a few days ago, I was presented with the tragically obvious answer to a riddle well known by many of you here in Europe. What do you call a foreigner who only knows one language? Does anybody know? So sad, so sad, an American. I'm an American, but I was told that the other day. Very rude, I thought, but anyway, very true. Most like this, and this is actually excellent timing for another free market roadshow in Hungary, because just 4 days ago, on March 15th, Hungary celebrated the outbreak of the 1849 revolution against the Habsburg Empire. Aaron, is that you? Hey. Habsburg Empire. Last week, Christoph Veres, and I don't know if Christoph is here, but Christoph and I had the privilege of touring the great Reformed church in the city of Debrecen, where the Declaration of Independence was issued. And just 1 month later, on April 14th of that year, and free markets are dependent on free political systems, and Hungary stands as a bastion of freedom for the world. The beauty of free market is broad, life-giving, and amazing, but there is a catch. There is a catch. In 1957, Ayn Rand's Atlas Shrugged became a bestseller and a rallying point for many conservatives. She powerfully exposed the fallacies of communism. Yet her philosophy of enlightened self-interest, which had a lot of merit, but still it omitted one vital element. Fortunately, another voice emerged, that of Whittaker Chambers. His courageous confession of treason and his role in exposing the communist spy Alger Hiss propelled his autobiography Witness to prominence. It became foundational for principled conservatives, including Ronald Reagan. Chambers directly challenged Rand in his now legendary National Review article entitled "Big Sister is Watching You." In it, he wrote, "Like any consistent materialism, this one, Atlas Shrugged, begins by rejecting God, religion, original sin, etc. Thus, Randian man, like Marxian man, is made the center of a godless world. His tragic fate becomes, without God, more tragic and much lonelier." Now, I apologize for those of you who are Ayn Rand fans. She did a lot to help expose communism's evils, but Whittaker Chambers added a very important part. Now I'd like to beg your indulgence as I proceed to brag about my country, the United States of America. So I've got a few props right there. All right, here we go. Thank you for your indulgence. Okay. Thank you. All right. Thankfully, America, with exceptions, does not follow totally Ayn Rand's lonely, self-serving model. Instead, America has chosen what I believe is an even better approach, one that combines freedom and capitalism with the golden rule given to us by Jesus: love your neighbor as yourself. I call this compassionate capitalism. To be clear, I'm speaking of genuine compassion, not the weak, milquetoast version often pushed by the far left. True compassion not only includes warmth and kindness, but also tough love concepts like confrontation, correction, and applying consequences when needed. I believe America's adoption of compassionate capitalism is a primary reason America has the world's largest economy. Indeed, our annual GDP of $40 trillion far exceeds number 2, China. China's $30 trillion, despite China having 4 times more population. America is a leader in compassionate capitalism because biblical values are embedded in our founding, our growth, and therefore our businesses. John Adams, our second president, said, "The general principles on which the fathers achieved independence were the general principles of Christianity." America has some of the world's most dynamic, successful, and trusted companies. Many codify principled behavior and train employees. Take Chick-fil-A, one of my favorites. Their corporate purpose is, their corporate purpose is to glorify God by being a faithful steward of all that is entrusted to us and to have a positive influence on all who come in contact with Chick-fil-A. They close on Sundays and still make millions. Just last week, a Chick-fil-A representative spoke here at the Danube Institute, so that was great. Or consider Tesla. Their vehicles on autopilot are 7 times safer than human-driven cars. Their newly revised vision, rolled out in January, I believe, of this year, is to build a world of amazing abundance. There's a little picture there of my Tesla parked right across from Chick-fil-A. So that was a little bit of heaven for me. Now, Karl Marx wanted abundance too, but using force, not freedom. I will admit America has too many examples of self-serving capitalism, which often appears within a culture of freedom. But I submit that overall, in America, compassionate capitalism prevails. A new and growing trend is encouraging compassionate capitalism in America. It's called impact investing. Dozens, perhaps hundreds of investment firms now provide investments that are designed to not only be profitable, but have positive cultural impact. Our firm, American Values Investments, for example, provides investors stock portfolios of companies that we believe best reflect America's founding Christian values as a way to impact America. By the way, the free market has produced what is now the fastest growing sport in America. It's called pickleball. I was actually played pickleball here in Budapest yesterday. And by the way, I need my, here we go. And there's 2 balls in there. Okay, so here we go. This is pickleball. It's a little wiffle ball. It doesn't hurt when you get hit. So who wants a pickleball? Here we go. Here it goes. There. Okay. Here we go. Oh, yeah. Sorry. Oh, wait. Here. This is coming back. There we go. So, well, I did bring a little bit of America with me with my pickleball racket. The biblical values that undergird Western civilization help make the free market beautiful. We ignore them at our peril. As Viktor Orban said in his 2022 CPAC address, first and foremost, we need to trust our Judeo-Christian teachings. They help us decide what actions are right and what actions are wrong. Be encouraged. Be encouraged. Biblical values, including authentic compassion, are being deployed in America and nations around the world. shining a glorious glow on the beauty of the free market. And as we say in Hungary, köszönöm.
Beautiful. That was fabulous. And now we're going to move to a very different topic. We have a keynote address entitled, Is There an AI Bubble? And it's being delivered by Edward Chancellor, financial author, analyst, historian from the UK. So please welcome Edward Chancellor.
Thank you, Melissa, and thank you, the Danube Institute, for inviting me here today. First time I've ever been to Budapest, so it's always nice to be giving a talk in a place we've never visited before. I'm slightly worried whether my topic of is AI a bubble might be off the free market road, but I'll try to interject a couple of Hayekian themes along the way, because the Austrians, as you may know, are very good at spotting bubbles, even though they often don't get the credit for it, which is the topic of a book I wrote on the history of interest called The Price of Time a few years ago. So the question is, what is a bubble? How do we define it? At one level, at a general level, it is a mass delusion. Go back to the first book on bubbles, Charles Mackay's Extraordinary Popular Delusions and the Madness of Crowds. So it's a period of groupthink in which the perception, the public perception, is not grounded in reality. There is, for those of you in the investment world, or economics, a much narrower definition, perhaps more scientific, of a bubble being defined as asset valuations that are far above intrinsic value. But again, the gap between perception and the underlying reality being there in both definitions. By definition, all bubbles break. If the bubble doesn't break, the person who identified the bubble got it wrong. So we'll see what happens. 26 years ago, I wrote a history of financial speculation called Devil Take the Hindmost, which came out in 1999 towards the end of the technology bubble. And for the last 26 years, I've been continue to observe bubbles, far too many bubbles for my liking and for anyone else's, really, except for those people who are shilling the bubbles. I wrote a paper earlier this year looking at providing an anatomy of past technology manias, and I want to use that as a framework, briefly, to describe whether AI is in a bubble. And I can show you historically what the bubbles look like. I'll make a few parenthetical comments about AI. You can judge whether you think those parenthetical comments are worthy or not, and we'll see over the course of time whether they are actually vindicated. That's a different matter. We do at least know what the history is. And the way to start, I think, with a bubble is we see with the tech bubble is the emergence of a new technology about which extravagant claims can be made with apparent justification. It's the narratives of bubbles which are the pathogens that spread the bubble disease throughout a society. And it also helps that the new technologies such as railways, telegraphs, radio, internet were often the means for spreading the narrative of the speculative narrative of which the technology itself was an object. I'll give you a couple of examples. For instance, in the 1840s, one paper writing about the British railways at the time, the arrival of the railway technology, the length of our lives so far as regards the power of acquiring information and disseminating power will be doubled, and we may be justified in looking forward to a time when the whole world will become one great family speaking one language, governed in unity by like laws and adoring one God. In 1904, Nikola Tesla evangelized the prospects of wireless technology. The entire Earth will be converted into a huge brain, as it were, capable of response in every one of its parts. By the mid-90s, the enthusiasm had turned to the internet. One writer, Nicholas Negroponte, the author of a book called Being Digital, wrote, "Digital living would reduce man's dependence on time and place, close the generation gap, and contribute to world unification." Didn't quite happen. Now, I think if any of you have got out of bed for the last 3 years, you should be aware that there has been no technology in history that has been accompanied by such a compelling narrative as AI. Here's this chart mooting the point at which the artificial intelligence will reach the moment of singularity, at which point the machine itself will have solved all the problems that man is capable of solving, and then solve a whole load of more problems too. And you'll read that the AI will soon be able to cure poverty and cancer, display the creativity of Shakespeare and the inventiveness of Nobel laureates. And Sam Altman, head of OpenAI, promises astounding triumphs, fixing the climate, establishing a space colony, and the discovery of all of physics will eventually become commonplace. It's become quite common to talk about these huge productivity gains that AI is set to deliver, with some saying that the economy might double every 2 to 3 years. Mark Zuckerberg at Meta claims that AI will lead to a new era for humanity. But there's also great fear of AI. The Nobel Prize winner Jeff Hinton predicts that AI is going to create massive unemployment and a huge rise in profits, making the rich richer and the poor poorer. And the Turing Award winner, his colleague Yoshua Bengua, says that AI has a chance for causing the extinction of humanity. So never before have leading opinions on a technology been so strong and so polarized. AI promises to deliver us both heaven or hell. Here's my Hayekian part. Great speculative manias usually take place during periods of easy money. There's not a coincidence. Valuation multiples increase when the discount rate is low. A low discount rate encourages investments in companies whose profits lie in the distant future. Excess liquidity boosts stock market turnover, and moral hazard when central bankers, such as the Ayn Rand disciple Alan Greenspan, intervene in the markets to support them, the sense of moral hazard creates the impression that investors are protected, and therefore the speculators acquire an aura of invincibility. This chart shows you interest rates and the UK, the British railway mania of the 1840s, and you can see that the peak of the mania occurred just as interest rates hit 2%, which I think at the time was, I'm talking about bank rate, was the lowest it ever got to. And a contemporary, John Fullerton, observed at the time that periods of easy money engender what he wrote a wild spirit of speculation and adventure. The dot-com mania took off towards late 1998 after Alan Greenspan at the Fed slashed interest rates in response to the near failure of the over-leveraged hedge fund long-term capital management, at which point people started talking about the Greenspan put underlying the stock market. More recently, the everything bubble of 2020 occurred when interest rates were at zero and when central banks collectively were printing trillions, I think roughly $8 trillion collectively, much of it going into the stock market. And the late Charlie Munger referred to the takeoff of the markets in 2020 as the most dramatic thing in the entire world history of finance. Subsequently, interest rates have risen, but this chart from the British monetary economist Tim Congdon shows that actually monetary conditions remain loose in the United States with strong growth in bank loans. Interest rates are higher than they were a few years ago, but relatively low compared to nominal GDP growth and inflation. So I think that the loose conditions that normally accompany a bubble are there today. General investor and consumer optimism. Charles Mackay, in his book Extraordinary Popular Delusions, wrote, "We find whole communities suddenly fix their minds upon one object and go mad in its pursuit." Here is a chart, a picture of a satirical illustration of the speculators in the Rue Quincampoix in Paris in 1719, following John Law's Mississippi bubble, probably the classic case of a bubble induced by easy money. Now, today, American investors, consumers are not optimistic. Consumer sentiment has been near all-time lows, but investor sentiment has been showing historically high readings. New York Stock Exchange margin debt has been at record highs. The share of U.S. household wealth held in equities has been at its highest ever level. It has never been easier to speculate than in the current day. We have smartphone apps that provide commission-free trading with plentiful cheap margin loans. There are an array of leveraged exchange-traded funds. The Wall Street Journal last year claimed that small dollar day traders and other everyday investors have played a bigger role in more markets than ever before. From 2022 to 25, the assets of leading retail brokerage Robinhood markets more than quadrupled. In fact, there are more accounts at Robinhood than there were online trading accounts in 1999 at the peak of the dot-com bubble. We've seen the GameStop meme craze, the explosion of zero-day options used for day trading, and the rise and perhaps occasional fall of cryptocurrencies, and now the takeoff of prediction markets and perpetual futures sold by, I don't quite know what these institutions are, sort of crypto exchanges, which allow infinite amount of leverage and 24/7 trading. And I live in Somerset in England, and I'm astounded whenever I talk to someone in their mid-20s, they almost all seem to have both crypto and AI exposure. So to me, it's as if this Ponzi scheme has actually enveloped a large part of the world. There you should see the average daily turnover of the US stock market, and high turnover, again, being a sign of short holding periods and speculative activity, which roughly doubled in the last couple of years. A wave of new publications promote the merits of the new technology. The investment writer Sandy Nan writes in his excellent book, which is called Engines That Move Markets, writes that new technology and over-promotion have always gone hand in hand. By the early 1840s, new railway papers promoting railways were appearing weekly and attracting investments from newly established railways. In the 1990s, we had a plethora of publications touting the internet. I suppose Wired magazine was the totemic publication. Here's a brief-lived one that I used to occasionally submit a column to called Industry Standard. Of course, we had CNBC, or Bubble Vision, as it was called then, touting stocks to the day traders, and the Financial Times, a reliable countercyclical indicator, restyled itself at the time the newspaper of the new economy. The AI bubble has a number of different publications, the Information, the Rundown AI magazine, the online platforms such as X, TikTok, Facebook, and Substack are flooded with content about AI. There are apparently 100 new academic papers published daily on the preprint site archive, or many no doubt written by AI, in other words, sloppy. And of course, the discourse has escaped containment, with all the world's media, major media, running leading stories on AI risk, and the various shenanigans of the key protagonists, Altman, Zuckerberg, and Musk. An efficient and productive finance supply machine capable of creating a host of new companies. There's a saying on Wall Street, when the ducks quack, feed them. And during bubbles, a lot of quacking going on. Over the course of the railway mania, for instance, hundreds of new railways were established. During the takeoff of motor cars in the late 1990s, thousands of automobile companies were founded in the US and Europe. And as some of you remember, there were a tsunami of IPOs during the dot-com boom. But actually this was exceeded by the IPOs that took place during the so-called SPAC bubble of 2020-21. At the moment, AI has yet really to hit the public markets, although OpenAI, Anthropic, and Musk's collection of AI businesses are trying to prepare for their IPOs. But there is massive funding for AI in the private markets, probably the one area in which this is distinguished from previous speculative bubbles, and massive debt being issued. Reuters estimates that 625 billion of debt was connected to AI last year, and we have all the machinery of modern finance, special purpose vehicles, private credit, asset-backed securities deployed to build out the AI infrastructure. Some over 60% of VC finance last year went into AI. This is an important point. It's not true of every technological bubble, but it's often the case that the technology is immature. And the good example of that is shown on the left-hand side is the carbon arc lamps that took off briefly in the 1880s and were deemed to be a potential alternative to public lighting using gas. And there was a little bubble, a company called the Anglo-American Brush Company, whose stock went up eightfold in 1880-81. Then it was discovered actually that it wasn't competitive, so stock collapsed. And at the time, Thomas Edison was touting his alternative technology, the incandescent light bulb. But what's interesting about Edison's claims at the time is that actually he hadn't got the light bulb technology sorted out. And Sandy Nairn writes in his book, it is likely that Edison was simply proselytizing based on his earlier successes in transforming theoretical breakthroughs into commercial reality. And I think this is a more important point. It's also likely that his difficulties in raising funding for these breakthroughs convinced him of the need to give out only positive information. In other words, the original wizard of Menlo Park, New Jersey, was the progenitor of the fake it till you make it philosophy, a dictum that many denizens of Menlo Park, California, have willingly embraced. Now, the trouble with the AI technology is, to my mind, it is an immature technology. No one can be sure how it will develop. Many experts now say that the large language models will not lead to artificial general intelligence. That is the view of one Turing Award winner, Jan LeCun, one of the so-called godfathers of AI, who left Meta as its chief scientist last year with that comment. It's also the view of another Turing Award winner, Richard Sutton, who said much the same thing. The OpenAI co-founder, Ilya Sutskever, recently declared that the age of scaling, putting more and more inputs into this model, more compute and so forth, was over, and it was time for the age for more research. And actually, earlier this week, I don't know if any of you picked it up, but Sam Altman admitted that the LLMs, the large language models, were not going to get you to artificial general intelligence. Now, this is an important point because the likes of Altman and Amadi at Anthropic and Musk have been claiming that artificial general intelligence was around the corner, and it would appear that much of the investment in AI has been posited on the idea of artificial general intelligence, and certainly the hype that I mentioned earlier. But the problems with large language models is that they don't reason, they don't engage in deductive reasoning, they can't tell the difference between truth and falsehood. They just provide you with a probabilistic answer. They are, at some level, like the people who run the companies. They are bullshit machines. And if those limitations are insuperable and the hallucinations that they produce don't seem to be going away, that, I think, is a major problem. Briefly, the bubble that you all know involves the suspension of normal valuation and other assessment criteria. During the Mississippi bubble, the Mississippi stocks trading at 50 times earning. Investors use something called the cyclically adjusted price earnings ratio, sort of long-term average earnings to price ratio. That has historically averaged around 17.5 times since 1880 in the US. It got up to 30 times. You didn't say it here. It got up to 30 times in 1929. It didn't reach that peak again until 1999, when it got up to 43 times, the highest level ever. And today, it's back at 40 times. And this chart shows you the percentage of the US stock market trading at over 10 times price to sales, I think, and you can see the bubble of the dot-com technology era quite clearly there. You can see the so-called everything bubble sort of bursting, and then you can see it coming back. Historically, companies that have traded at more than 10 times sales have delivered 2% real returns, or roughly less than 1/3 of the market. The valuations in the private markets for these AI companies, such as OpenAI, valued at, I don't know, in the range 750 billion, 725 to 750 billion on, I think, last year, 8 billion of revenues, 15 billion of losses projected to double every year for the next couple of years. There has simply never been more inflated valuations. It's true. We have examples of, I can't really say that Tesla has grown into its valuation, because Tesla is the sort of perpetual bubble, but there have been other businesses, say like Netflix, that had naysayers and made good in the end. But this is a massive bet for sure. Huge overcommitment of capital during bubbles. Here you see the British Railway investment, capital investment in the mid-1840s, roughly following the share price index. Huge amount of overinvestment during the dot-com bubble. Currently, I don't know, around somewhere between $600 and $1 trillion a year being invested in AI. McKinsey thinks it will get to 5 trillion by 2030. That is what we're seeing now is one of the great investment booms. Not as big as a railway mania, which was 7% of GDP, consuming the entire nation's savings and leading to massive losses, but probably the second highest. Here's the dot-com bubble. You see the investment to GDP bars against the replacement cost of the market. So as the replacement cost of the market goes up, you had more investment and hundreds of thousands of miles of fiber optic cable left over. Here you see the so-called hyperscalers CapEx. To my mind, they seem to be caught in a sort of prisoner's dilemma because they fear that one of the other companies will get to AGI, so they think they better throw in the money as well. What's his name? Zuckerberg at Meta says it doesn't matter if they lose $200 billion. It's better to play the game. The head of Alphabet says the same. Sam Altman even admits that it's a bubble. Jeff Bezos says, well, it's probably a bubble, but bubbles are a good thing. Well, they might be a good thing for society. They're pretty lousy for investors, but that's a different matter. And finally, the bubbles are accompanied by unscrupulous and fraudulent behavior. And the key comment I like is one of J.K. Galbraith in his book, The Great Crash of 1929, where he coins the term the bezel, which he defined as an inventory of undiscovered embezzlement in, or precisely not in, the country's banks, businesses and banks. Every bubble is a fraud. The South Sea bubble was the South Sea fraud. The word bubble meant fraud in its original usage. During the 1990s, there was an immense amount of highly unscrupulous or unchristian corporate behavior going on, ending in the bankruptcies of the likes of Enron, WorldCom, and the like. And the bezel doesn't only include fraudulent behavior, it's also sort of pushing the envelope on accounting. Now, clearly today, we don't see the bezel. The bezel is really only revealed after the fact, but we see these extraordinary puffery, hype of the AI leaders, which apparently is protected under American law now by some when Musk says something and people complain, it goes to court. It says this is just ordinary corporate puffery. And then we see that the companies, these hyperscalers, have extended the depreciation schedules of their chip investments, and they've engaged in a whole load of round-tripping investments. So I think it would surprise me if the bezel didn't appear. And then you get the shake-up. So quickly, the last points. Capital is entering the AI space, exceeding the technology investment at the turn of the century. The risks are elevated by growing amounts of debt and off-balance sheet commitments. Many questions remain about the potential of LLMs. And I think the bubble there is people not paying attention to that. And based on past precedent, this certainly looks like a bubble. Markets, US market at least, second most expensive in history, most expensive by some measures. This time is different. It could be different. We've heard that it might be different before, but they are said to be the four most expensive words in the English language, and every previous new era has turned out to be a delusion. So we'll see what happens with this one. Thank you.
You know why we had Carter first, because Carter's very uplifting. Now we've got a little bit of doom, and now we may have a little gloom with the next presentation. It's the Western Civilizational Decline, presented by Max Rangley, who's editor of the Capitalism Center and author of The Age of Debt Bubbles. Where are you, Max? There you are. Welcome, Max.
Thank you very much. Thank you very much for the kind introduction. And indeed, we are in quite an extraordinary period of economic history for a number of reasons. And one of those reasons is, for this first time in centuries, millennials are now said to be probably the first generation since before the Industrial Revolution that will be poorer than their parents. And it's looking like this is not just going to be an anomaly as well. If anything, the generation that's younger than us, Generation Z, is looking to be even poorer than millennials. So this is now a sustained trend. And in the UK, some people say this is the first time this has happened since the early 19th century. But actually that was somewhat of an anomalous period. There was the Napoleonic Wars and various other events happening at the time. I think you can actually go back quite a few hundred years to see a pattern like this. I really think it is very, very unusual. But also you shouldn't really underestimate how profound the development this is. The question is this to do with some recent economic policies, for instance, or is there something deeper that's happening? And that is the title of my talk today, Is the West in Civilizational Decline? And there have been some interesting books written in recent years on this trend. One of them was called The Rise and Fall of American Growth by Robert Gordon, a professor of economic history in the US. And he argued that actually from roughly the early 20th century, the amount of innovation has actually been in decrease. And then this stagnation of living standards then set in. Then there was another book called The Great Stagnation by Tyler Cowen, which actually argues something similar, that from roughly the early 20th century, there has been a steady decline in the amount of innovation in technology and science, and then from roughly the 1970s onwards, this stagnation really set in. Another thinker on this is called Jonathan Hubner, and he was a physicist, actually, working for the US government, plotting technological and scientific developments over hundreds of years. And he argued also that they increased steadily from roughly the medieval period over the centuries, and then went into decline from roughly World War I onwards. Now you may be thinking, well, come on, what about smartphones? What about flat screen televisions and all of these other developments? Well, if we compare the two periods then, for instance, 1850 to 1920, and 1950 to 2020. Between 1850 and 1920, we saw the invention of the automobile, the telegraph, the telephone, the computer, the aeroplane, motion pictures. We saw the electrification of cities, the radio, typewriter, reinforced concrete, X-rays, recorded music, germ theory, and indeed many other developments. Prior to all of this, if someone wanted to get a message from Europe to the USA, someone actually had to sail across the Atlantic and deliver that message. People were still riding around on horseback. So the lives that people were living in 1920 compared to 1850 were really radically different. From 1950 to 2020 then, most of the developments that happened were iterative improvements, at least it's argued, on these previous developments from the late 19th and early 20th century. So anything from televisions to washing machines, and actually, of course, even though computers and smartphones are a significant development, they're still, in a sense, improvements on technologies that were developed in this previous period. Now, we just had a talk on AI, and indeed, I think that does have the potential to be a truly revolutionary technology, and indeed is revolutionary. We are just finishing a book on AI, which I did with Lord Fairfax. It's called The Artificial Intelligence Revolution, an academic book to be published by Springer Nature. And we have many of the top experts from around the world writing chapters in this book, including some of the AI experts that were just mentioned. So this book will be out in the next few weeks in hardback. So AI is something I've been fascinated by for many years, since I was a teenager. But nevertheless, thus far, it's certainly not bringing about the productivity improvements that some people have claimed would happen. In fact, we still have stagnant or even falling living standards for young people. So what happened then during this period I mentioned, from the 19th century into the early 20th century, where there really were these extraordinary developments in living standards by just about every possible metric? Well, prior to this, there have, of course, been a number of great civilizations. In China, the Song and Tang dynasties gave the world paper, movable type printing, gunpowder, and the compass, among many other innovations. Ancient India saw developments in pure mathematics, astronomy, and architecture. And the Islamic Golden Age gave us the very words algebra and algorithm, among many others. In ancient Greece, in 200 BC, the ancient Greek polymath Eratosthenes calculated the circumference of the Earth to within about 1% accuracy by putting sticks in the ground and measuring the shadows at different times of day. Yet actually, across all of these millennia, living standards actually remained remarkably flat. There was not a smooth increase in living standards over the last few thousand years, as is sometimes imagined. Living standards, actually, GDP per capita was roughly around $1,000 per year, or a few $100s per year in all of these civilizations. And life expectancy was also roughly about 30, once you take into account infant mortality. Because again, up until this remarkable period of history, roughly half of, or almost half of all of the human beings that were born died in infancy. And then what happened then was this remarkable period of history in the West, what I will call today the Promethean epoch of history. And from the Enlightenment onwards, Europe and the US saw the first sustained increase in living standards in history. It saw the innovations that happened from the Enlightenment onwards in the 18th, the 19th, and the early 20th century, as I mentioned, revolutionized everything: the railway, telephone, electrification. Sir Charles Babbage invented the computer, and then shortly after, Ada Lovelace was the first computer programmer. But then additionally, we saw the first modern financial markets and copyright law, and the rise in prominence of the modern corporation. James Clerk Maxwell discovered the laws of electromagnetism, and Charles Darwin changed how we understand our place in the world, while Einstein and quantum theory changed how we understand our place in the universe. But this period was also an apex point in world history when it comes to political developments. It saw the banning of slavery. It saw the birth of modern economics with the writings of Adam Smith, Frederick Bastiat, and others. And even the very terms left-wing and right-wing come from the National Assembly around the time of the French Revolution, where the different factions sat. So this Promethean epoch then was more than just science and technology. In fact, it brings to mind a quote from Aeschylus's masterpiece, Prometheus Bound, where Prometheus is indeed bound to the rocks, and he says to the sea nymphs, "I gave them hope, and so turned away their eyes from death, and I gave them fire, that thereby they might learn many arts." And of course, in Prometheus's tragedy, Prometheus does not just steal fire from the gods, he also teaches humans the arts and sciences. And during this Promethean epoch then, just as important as these developments in economics and science was the evolution of culture. The invention of the novel in its modern form allowed a journey into the human soul that was unparalleled. But there was also extraordinary developments with music, with harmonic complexity, through Bach, Mozart, Beethoven, Berlioz, and Mahler, among many others. Now, at the core of this epoch was the Enlightenment, but to say that it was only Enlightenment values would really be too narrow. It began really during the early Renaissance and, for instance, Romanticism in the 19th century. The philosopher Isaiah Berlin said that 19th century Romanticism was the greatest single shift in the consciousness of the West. And this also served to enrich European culture, bring about a new flourishing of literature and music. So in other words, rather than trying to define this Promethean epoch in terms of specific institutions, it makes more sense to think of Europe as having a certain élan vital. It's actually difficult to describe, really, but the same élan vital that gave us science and industry also gave us Goethe's Faust and Franz Liszt's Sonata in B minor. So then, I noted earlier the historians of science and economic historians who write about how this trend of innovation went into decline from the early 20th century, actually from around the time of World War I. And in particular, it was the curve of Jonathan Hubner that set off a lot of this research, where he argued that really World War I was the beginning of this descent. And I think you could argue, again, this goes well beyond just science and technology. It's difficult to think of works of literature, let's say from the 1970s onwards, that match those of Tolstoy or Proust or James Joyce or Dostoevsky. And during this period, the harmonic complexity of music likely also peaked with Gustav Mahler and his late symphonies pushing the chromatic scale to its limits. So then, with this in mind, if we start to examine some thinkers who have looked at the rise and fall of civilizations throughout history, let's see what we can learn from them to see what's happening here. Now, the first we'll look at is Joseph Tainter, a relatively recent thinker, who wrote about how civilizations reach a point where they become more and more complex until they essentially become sclerotic from so much bureaucracy. Now, I'm sure many of us are familiar with this, living in Europe and really the rest of the developed world as well. But I think it's also more complex than just that. Another thinker, John Bagot Glubb, who was a British army officer and wrote a lot on history as well. He argued that civilizations go through 6 phases. The phase of pioneers, of conquests, of commerce, of affluence, of intellect, and then of decadence. And you can certainly see patterns of that with Europe during this period. But then also the Islamic thinker Ibn Khaldun argued that civilizations rise through what he called asabiyyah. That's really a social cohesion and a united purpose. And when this social cohesion begins to dissipate, then that is when a civilization begins to go into decline, when there is no more shared values, for instance. Some of you may have seen the BBC series Civilization by Kenneth Clark. That's available on YouTube actually now. And he famously argued that, among other things, it's when a civilization loses confidence in itself, that's when a civilization goes into decline. We may also see patterns of that today as well. But then also a particularly important thinker was Arnold Toynbee. And actually around the time of World War I, when it shows many of these patterns going into decline, Toynbee argued our own postmodern age has been inaugurated by the General War of 1914 to 1918. So he recognized that some type of profound shift had happened around the time of World War I. And Toynbee analyzed 26 different civilizations throughout history. And he famously argued that civilizations don't die as a result of murder, but rather as a result of suicide. Civilizations go into decline because of factors within their civilization rather than outside forces. And in particular, he argued that the, quote, creative minority becomes a, quote, dominant minority. So during the rise of a civilization, the class of leaders would be, let's say, like the Medici, funding beautiful art and beautiful architecture. They don't even really think twice about it. It's just natural that they would want to produce this beautiful architecture that will be here for hundreds of years. And then eventually, when a civilization goes into decline, that creative minority is replaced by a self-serving dominant minority. They no longer produce beautiful architecture or art. They're not interested in these things. They just want to protect their own power. We can certainly, that certainly seems familiar today. And so what results is cultural stagnation and loss of energy. But actually, Toynbee argued that this was not inevitable. Another thinker, the last thinker we'll look at, is Oswald Spengler, who was writing roughly 100 years ago. And he argued that the rise and fall of civilizations is cyclical. You have a spring, a summer, an autumn, and a winter. And if we think about the West, for instance, the spring might be roughly from the time of Magna Carta. Well, Spengler actually argued that the West had gone through 2 cycles. Greco-Roman civilization was what he called Apollonian civilization after the god Apollo. And that followed this rise and fall pattern. And now we have essentially the second cycle of Western civilization, what he called Faustian civilization. So you could argue that, for instance, the spring of Faustian civilization was around the type of Magna Carta, and then you go through the Renaissance, the summer of civilization, and the Enlightenment. And then autumn is when a civilization goes into cultural decline and begins to lose its energy. And then he actually argued that at some point in the early 21st century, Faustian civilization would go into its civilizational winter. So the question is then, if we examine our current situation, what can we learn from each of these thinkers? I think they all have ideas that we can learn from. Tainter, of course, talked about the amount of bureaucracy, the sclerotic bureaucracy of civilizations in their late stages. That's certainly something we can all learn from, but that's something relatively easy to fix. I think there are deeper problems with the West. Ibn Khaldun talked about asabiya, this idea of social cohesion and shared values. I think that has also gone into decline. That is something more difficult to rebuild than just getting rid of bureaucracy, for instance. Glubb, of course, talked about these different phases of civilizations. But I think, for instance, the idea of becoming an interplanetary species, this great ambition of Elon Musk and others, actually does start to revive some of that spirit of the Promethean epoch. Then, of course, there was Kenneth Clark, who talked about the decline in self-confidence of a civilization being the key factor. Again, I think in many respects that comes from many of those other things that we're talking about, being surrounded by beautiful architecture and so on. Toynbee, of course, discussed the ruling class of a civilization and how they must be this creative minority if a civilization is going to produce great works of art, great scientific endeavors and architecture and so on. And then finally, Spengler, I think he's evidently pessimistic when it comes to this fatalism of the rise and fall of civilizations and their life cycle. But I think one of the key things we can learn from Spengler actually is this idea that civilizations, their rise and fall manifests itself in so many aspects, in architecture, in art, in music. It's not just a case of, if we get rid of some bureaucracy and implement some pro-business policies, everything will be fine after that, much as I would like to do those things. But nevertheless, there are some important differences with where we find ourselves now relative to these dozens of other civilizations that were studied. The first one is the nature of the Promethean epoch that has occurred over the last quarter of a millennium or so. As I mentioned, living standards actually remained pretty flat through almost all of human history, whether it's China, Rome, or wherever else. What we've seen over the last quarter of a millennium especially is something truly extraordinary and unprecedented in human history. Secondly, I think this fatalism that sometimes appears with these historians of the rise and fall of civilizations. If we look at China, for instance, when Deng Xiaoping became premier in 1979, I think it was, China's GDP per capita was something like $200 or $300 a year. It was poorer than most countries in sub-Saharan Africa. In fact, the GDP per capita in China in the late 70s was lower than it had been 1,000 years earlier at the time of the Sung dynasty, when they were producing all of these great inventions. And within 2-3 generations, China has completely transformed itself. So I don't like this fatalism of some of these thinkers that I've been discussing. But also I think it's really become quite a deep psychological factor in Europe especially, but frankly to a certain extent in the US, of just this loss of ambition, this loss of this spirit that did produce the Promethean epoch. And so whilst we can hopefully bring in more pro-business policies, that's really the surface level and the easiest things that we would need to do to truly revive the West. Thank you very much.
So from civilizational decline, we're going to go down Western decline. So is the West in financial decline? Richard Teeter, tax policy expert, offshore tax specialist. It's now your time. Thank you very much.
So yes, thank you, Melissa, and the Danube Institute, and of course Barbara and the Austrian Economic Center as well for organising all of this and inviting me here. We're at an odd time, aren't we? Things are going very strange. It's not just that, governments are changing, governments always change, but the whole sort of philosophical underpinning that we think we got used to is changing. When I was sort of just graduating from university, Francis Fukuyama's book came out, The End of History, with the idea that we'd done all the big things. Yeah? We'd stopped, communism had been defeated. All these big issues that people had spent generations arguing about had all finished. So, oh, thank you. How's that? Is that better? Yeah. Okay. And we got to this point where we were thinking, the big issues have been solved. We know what we're doing. We have, these nice sort of relatively free market economics, a bit of globalization, a bit of government as well. But we've sort of got, and a few people want a bit more government, a few want a bit less, but we'd sort of solved it all. One of the reasons I think why there's very few of people my age in government, in politics, that you get people older than us, people younger than me, but very few people my age, and because we just didn't see the point. We'd done all that. We'd solved it. And yet suddenly here we are, back with all these things changing again. And how do I do this? Oh, it's that one. Thank you. Yeah, there we go. Okay. And then we said it's the 250th anniversary of Adam Smith's The Wealth of Nations. And here we are, a nice policy that we got to carry a state to the highest degree of opulence from the lowest barbarism. Little else is required, but peace, easy taxes, and a tolerable administration of justice. It's one of my favourite quotes. And then all the rest just comes about by the natural cause of things. Everything just happens. And this is the sort of idea that we got. That, people can get on with things, people can do things. And yet suddenly now we've got this new idea, we've got this new sort of restrictions and, against the whole, we'd had the whole Chicago consensus, the idea that we could do free trade, we could leave people to get on with things, and wealth would flourish and the rest, and human people would flourish. And then suddenly it all changes. This is a graph of tariffs imposed by America. And look what happens. We could have extended this a lot further back, and it just chugs along flat. And then suddenly, whoop, bam, bam, we're going shooting right up again. Now, I'm not going to guess what Trump is doing. I'm not, part of it might be that he's trying to open up other countries and persuade other places to lower their tariffs. And America is certainly not the only culprit here. There's a lot of other countries that are doing problems as well. But it's a huge change. And one of the frustrating things for me is that, yes, we talked about Adam Smith, and I'm a fellow of the Adam Smith Institute in London, so I have to mention Adam Smith. It's sort of compulsory. But it's not just that we thought we'd solved these problems in the 90s. It's not just that we thought we'd solved these problems 250 years ago. Let's shift on from there. Here's Adam Smith. If a foreign country can supply us with a commodity cheaper than we ourselves can make it, then it's better to buy it off them with some part of the produce of our own industry. What's the point of making money? The previous slide I did was Colbert, the French finance minister, who thought that the point of the economy was to pile up loads of gold and silver. So you sell as much stuff as you can, you export as much stuff as you can, and you reduce your inputs as much as you can so that you end up very wealthy. You end up with a whole pile of silver and gold. What's the point of that? Unless you're doing the Scrooge McDuck thing, where you just like to ski down a huge mountain of gold. What's the point of doing it? The whole point of having wealth is to go out and spend it. That's the fun bit of it. That's why we do it. That's why we go out to work and why we do business and why we set up companies and all the rest of it. It's so that we can do all these fun things with the money that we've got. And it wasn't just Adam Smith. Go back earlier. England, there's a response to mercantilism, to tariffs, to this restrictions on trade. England will not be impoverished by a merchant carrying out 100 shillings from the country if he brings home for them as much pepper as an Englishman will give him 200 shillings for. So the merchant and England should gain. So you go out, you do business, you make some money, and then you go out and buy stuff from abroad. Pepper was the classic thing that you couldn't do at home back then, so you brought it back. And you make everybody wealthier by allowing this free trade to happen. And who was this? This was Sir William Petty in 1682. It wasn't just that we solved these problems in the 1990s. It wasn't just that Adam Smith solved them 200-odd years ago. This was nearly 350 years ago that we knew that free trade, cooperation, working across borders was the way to make us all wealthier and happier. Okay. Now, it's certainly not just the US. The EU, the European Union, is a lot of this problem as well. The Fortress Europe idea, there's a real debate amongst the free market people as to whether the EU is a good idea or a bad one, and this really came out in the run-up to Brexit, where organisations like the Institute for Economic Affairs were split pretty much down the middle in terms of who was supporting and who was opposing it, because what you've got in the EU is some sort of free trade within the Union, but also restrictions on trade from outside. And what was called Fortress Europe, that you put this wall around Europe and everything's all nice and protected within it, but we don't go and trade with everyone else. But again, it's restricting us. It's denying us the possibilities. It's denying us the opportunities of going out and doing things from abroad, of trading with the rest of the world. And this is why, this is obviously an old cartoon, because Britain's still in there in the European Union. We're now on the outside of that wall. But the reason why people like me supported Brexit was that we didn't just want to trade with Europe. There's a whole big world out there that we wanted to go and get involved with. Meet people, do business with them, make money and bring back wealth to the country from them. So we were seeing Brexit as an increase in opportunity, as an expansion of Britain rather than as a restriction. Okay, it perhaps didn't quite work out like that, but that's our government's fault rather than the principles. So yeah, and it's not just tariffs. The European Union protectionism, yes, there's the Fortress Europe tariffs. There's also what are called soft tariffs, the regulation, the administration. Okay. So, the fact that if you're trying to export something to France, you've got to send all of it through one little port somewhere where there's a customs official writing everything out by hand on a bit of paper before you're allowed to bring it in. These rules that they bring in. BEFIT, Business in Europe Framework for for Income Taxation, where they're trying to bring a single corporate tax system across the whole of Europe. So if you've got any businesses operating within the European Union, the way that you'll be taxed is by doing a single tax calculation across the whole of Europe, then allocating that profit to that taxable income to all the different countries within Europe to be taxed. And it's all about, again, trying to sort of stop this competition, trying to stop all the differences. Hungary has a very different tax system to Finland, has a very different tax system to Italy. Do the Italians have a tax system? Which have a very different tax system to Luxembourg. You've got all these different opportunities there, these different ways of doing business, which are working to, giving different ways of attracting different types of businesses into them. But the European Union's trying to sort of flatten that out. The Commission's trying to say, no, everything has got to be the same. We're getting rid of all these opportunities there. And the OECD as well, global minimum tax, absolutely dreadful idea. Again, we're doing this befit, but on a global scale. And again, it's mostly the European Union behind that. But, we're trying to flatten out all these differences, reduce all these opportunities by saying everything's got to be the same now. But why do I like free trade? Why do I like having these opportunities, these differences? As I say, it's because the whole point of making money, of doing business, of working, is to be able to have fun, to spend it, to go and sit out and have a drink and all the rest of it, all these other things that you do. And there's a little story that I like to tell my students that, if I want my garden to be looked after at home, best way for me to do it is for me to write an article about tax, get paid for it, and then use some of that money to pay somebody else to look after the garden. That's fine until we start putting tax into there, and suddenly the money that I get for writing the article, most of that's gone. And the gardener, well, she needs more money in order to get the £30 that she wanted after tax. And suddenly it doesn't work, because I'm not making enough money from writing the article in order to pay her to do that. And so what do? I don't write the article, I do the garden. Because that's making me more money, that's making me wealthier by doing that. But is it making the country wealthier? No, of course it's not. The editor doesn't have an article to put in his magazine. The readers don't have a wonderful article about tax to read. The advertisers get annoyed because there's no articles in between the adverts. My gardener's unhappy because she's lost her job. She doesn't go to the pub and have a beer on the way back, so the pub loses money and the barmaid gets laid off and doesn't have a job. And the garden looks a mess because I'm no good at gardening. I'm good at writing articles about tax. And this is what I mean by that cooperation, by the benefits of being able to trade across borders, because this is the equivalent of saying, restricting me like this is the equivalent of the tariffs. It's saying you've got to do everything within the country. I've got to do everything within the home. Whereas what I want is the free market thing, where I do what I'm good at, make some money out of that, and then I go off and pay someone else to do that. And yes, okay, this is the gardener, so it's in the same village, not even in a different country, but think of that on a global basis. This is the equivalent of me, the Petty's merchant, taking my 100 shillings that I've got from writing the article, and then going off to the other side of the world to buy pepper with them. I've done something that makes me money in order to be able to do something that makes my life better. And that's what tariffs, that's what all these restrictions do. That's what all these taxes do. They just get in the middle, get in the way of, and stop all these good things happening. This is one of my favourite examples of it. This is Hong Kong and the growth of wealth. Max talked about the China and so on, but Hong Kong's amazing. 1950, it was a British colony. Income about a fifth of what Britain was per capita. Then this chap comes along in the top right, John Copperthwaite, my favourite civil servant, probably about my only civil servant that I like. He said, no, we're not going to do this. What the UK was doing at the time, 60s, 70s, very high regulation, high tax economy. He said, no, we're not going to do this in Hong Kong. We're going to be low tax, low regulation, and let people get on with making wealth for themselves and for each other. In fact, he was so hardcore that he wouldn't even let the government collect economic statistics, because he said, once you have statistics, politicians start trying to improve them, and that's when everything gets messed up. And look what happens. While the UK is sort of slowly bumbling along, Hong Kong just takes off. And somewhere around the 1990, GDP per capita in Hong Kong overtook the home country, overtook Britain, its colonial rulers. And this is the European Union. Look, each of these little diamonds is a different country. And we've got government spending, so effectively long-range tax rates going across the bottom, getting low here, getting higher along here. And then up the side, we've got jobs growth. How much do we generate? How much jobs do we generate? And as you'll see, so basically a proxy for how well's the economy doing at growing. And what you'll see is your lower tax countries are much better at boosting the economy, at getting jobs created and so on. And yeah, you can put these little lines on them, but actually what's far more fun is this. Let's put a cross on it. There's a point somewhere around 42% where the government's taking too much tax. And look at that. Top left, you've got the low tax, high growth countries. Bottom right, you've got the high tax, low growth countries, and there's nothing in the other two segments. Okay, there's that one there that just sneaks over, but that's Italy, and we don't trust Italian statistics. So, but, you know, it's really stark there. Tax things too high, regulate them too much, and your economy just falls off a cliff because you're not giving people the opportunity of doing that. And the problem is, this is what we're getting, this is where we're going, I think, with the world now. We're getting this higher tax, higher regulation, but I think it's more philosophical than that. You'll notice most of the speakers have been wearing these. I haven't. I don't know what you call them here. We call them lanyards. Yeah, and people wear them around their necks with badges on and things. There's a new insult coming out in England, which I love, which you're starting to hear, where you refer to people as a lanyard wearer, or the lanyard classes. And you can just imagine the sort of person the petty bureaucrat, you know, the sort of person who comes out with a clipboard from the local government and says, no, you can't do that, you've not got a permit. Yeah. And unfortunately, also the sort of person who's in the HR department of a big international company, because, or the compliance office and so on, because actually big companies are not immune from this either. We like free markets. We don't necessarily like large corporations. And so you get all these people, but trying to tell you that you can't do this, you can't do that, you've got to do the other. And it's all, I think, the same thing, part of the same thing, part of this culture that we're getting, what I call a culture of fear, where we don't want people to do their own thing. We want to ban them. We want to ban things. We want to regulate things. We want to tax things. Government knows best. Yeah. And as I say, as I showed, hopefully with this, that's not what we want. That's not what gives us the good life. That's not what makes the Western world boom and prosper. What we want instead is a culture of opportunity. We want entrepreneurship, risk-taking, but more than that, a philosophical feeling that we're open to the possibilities of the world. And that's what tariffs and all these other tax things seem to really be pushing down on. They're saying, we've got to protect what we've got here, pile up gold and silver in our vaults, rather than go out and do things, rather than go out and make money, meet people, go and do good things in the world. So that's my fear, and also that's my hope, that the downside is that, yes, we do seem to be getting more controlling, more regulating, more taxation, and that's really starting to make our economy decline and give people fewer opportunities, especially for you students here. I'm fine, I'll be all right, because I'm old, I've not got to last very long. But, my students who are graduating and going out to look for their first jobs, for their first opportunities, where are they coming from? If we've restricted our economy so much that it isn't generating these new opportunities for them. So let's not have governments try and push us into this culture of fear, to over-regulate, over-tax us. Let's try and go out and have this culture of opportunity and see the world as a prospect of a way of making a better lives for ourselves. And as we do that, making more opportunities and better lives for everyone around us as well. So let's go out and do it. Thank you.
from the double lanyard community. I invite you all to have a coffee break, and we'll resume as close to 4 as possible. Thank you. All right, thank you again for sticking with us. Now that we've had a little bit of caffeine, we have the fabulous David Frost, a.k.a. the Right Honorable Lord Frost of Allington, PCCMG, and Director General of the Institute of Economic Affairs in the UK. And his presentation is, Can Free Markets Save the West? I think we all know the answer to that. David.
Great. Well, thank you. Thank you, everyone. Thank you to Melissa and the Danube Institute. Great to be back here after a few months. And thank you to Barbara and the Austrian Economic Center for everything that you do. So I took as my title, Can Free Markets Save the West? And I didn't realize it would be part of the kind of cultural, civilizational theme that has already emerged today. My answer is that free markets can help save the West. They can help save it. But given the situation that we're in the West, and particularly in Europe, free markets are only part of the solution to our problems. So the West's problems are certainly economic. And in Europe, above all, we've built societies in the last couple of decades of slow growth and growing collectivism. But at the same time, our problems are also political, cultural, and democratic. There's a lack of confidence in our own values and in the institutional and cultural frameworks that have brought success. And I think if we're serious about reviving the West, we have to understand all these things together. We're not just dealing with a growth problem, though we are dealing with that. There's much more to it. What I'm going to argue is that the growth problem is in part a symptom of a wider crisis of confidence in the institutions, habits and loyalties on which our kind of free societies depend. So, but let's begin by looking at the nature of the growth problem that we've got. And actually what I'm going to do complements Max Rangeley's big picture quite by chance, as it's turned out, as we haven't consulted on this. But I'm going to look in particular at the last 25 years or so and what's happened over that period. Now, a small number of rather crudely drawn slides, I'm afraid, compared to the very professional ones that others have produced. Is it the arrow button? How does this... There's a red arrow.
It's the big one in the middle of the top.
Ah, there we go. Very good. It's always been the last button I choose, I knew. So if we look at this chart, I've chosen deliberately for Europe the kind of frontier economies, France, Germany and Italy. In other words, those that really ought to be comparable to the United States in some way. And obviously what we're seeing here is a significant fall in growth, GDP growth per head over time in continental Europe, in the leading economies of continental Europe. It has fallen somewhat in the US, but by no means to the same extent. And there's obviously a particular UK story, the orange, yellow-orange column, which I'm going to come back to in a moment. But the big story, obviously, is that America has continued to generate growth in a way that Europe hasn't. So why has this happened? Why is Europe's growth so poor? And I point to three factors here, and this is what I want to focus on. First of all, high and increasing levels of taxation and spending. Second, energy policy, and in particular the impact of net zero. And third, without exaggerating UK influence, I think there's something connected to the removal of the UK as a kind of competing European economic model. Not because of Brexit, but because of choices we made long before that. So I'll come back to these points, but let's look at them in turn. Before I do, I also want to note that what I don't think is a strong explanatory factor for this picture is all the things that free marketeers like: supply side reform, reduction of bureaucracy, all those kind of things. And I'm not saying they're not important, and certainly Europe's performance on many of those things is not great, but I don't think it's the main explanatory reason for the picture that we're seeing there. So first of all, taxation and spending. Now, the great continental economies of the production frontier, France, Germany and Italy, were already in 2000 high tax, high spend societies by the standards of the developed world. And since then, they've gone further still. The state was already large and it has become larger. The burden was already heavy and it has become heavier. And if you look at the second chart here, same colours, same countries, you can see the problem that you've got France, Germany and Italy way out in 2000 compared to the UK and the US. By 2024, everybody's gone up. The UK's caught up quite significantly, and actually in a couple more years that number will be 46%. And the US too has seen an increase. Now, what that shows, obviously this isn't a problem that's unique to Europe over the last couple of decades, but nevertheless the US started from a much lower base and has remained, by comparative standards, a relatively low tax, lower spend economy. And where that difference is matters. And Richard Tether mentioned earlier the figure of 42% as the one where economists start to move from high-ish growth anyway to low growth. And you can see that continental Europe was already above that frontier and the UK has moved across it in the last 25 years. America's gone up, but it's still below that threshold. And I think this tax and spend is obviously a big part of the problem. States don't spend tax in a vacuum. They absorb resources, they distort incentives, they direct effort away from production towards transfer, administration and compliance. And when that happens over time on a sustained period, you reduce the energy, dynamism and risk-taking which growth depends on. And you also change the nature of politics itself. The larger the state becomes, the more politics becomes a struggle over how to get your hands on the state's ability to extract resources, and the less it is about increasing the size of the pie in the first place. You get more lobbying, more rent-seeking, more attempts to live off decisions taken at the centre, fewer rewards for productive effort. And I think that's especially true in the economies we're looking at, economies already at the production frontier, or close-ish to it anyway. If you're a developing country, there are gains from catch-up, from copying, importing capital and so on. But for these countries, growth is harder. You need all the things we know well: entrepreneurship, innovation, productivity improvement, experimentation, and so on. And instead, what high tax does is ossify systems, entrench incumbents, protect insiders, make every decision more political. And that's, in my view, one of the big explanations for the decline in growth. Moving on, the second factor, energy. Now, since the mid-2000s, since the beginning of the climate panic, I guess, energy consumption per head has fallen across Europe. In the EU 27, it's down by about 20%, and the UK is actually down by 40%. And there is the story. And it bears saying that this trend over such a sustained period is, I think, unprecedented, really, since the Industrial Revolution. You do get some bumping around, obviously, but to get such a sustained decline over such a long period is unique. And in my view, it's the result of deliberate policy. We've chosen to make energy, particularly electricity, but not only that, more expensive, partly through the forced transition to renewables, but also partly by choosing to do these things in a very state-directed way, picking winners, choosing technologies, not allowing the market to work. And we've chosen to handicap ourselves in one of the basic inputs. Obviously, energy is not just another sector. It feeds into all parts of the economy. Manufacturing, transport, digital infrastructure, everybody needs energy. And when energy is too expensive, everything becomes more expensive. When governments deliberately constrain energy supply as a result of their ideological targets, they're not helping create a modern, ambitious, outward-looking economy. They're helping create stagnation. And cheap and abundant energy is not a luxury appendage to growth. It's a precondition of Western civilization. And if a society gets used to having less energy every year, it is in effect reconciling itself to doing less, making less, and in the end, being less. So I think the biggest supply-side reform that Europeans could do at the moment is simply to abandon the current crazy energy policy. I think the gains from it would be huge and would come really quite quickly. If you want growth, bring the market back into energy policy, make energy abundant, reliable and cheap. It really isn't complicated.
Is this downward trend the result of deindustrialization?
It's the cause of it, in my view, the cause of deindustrialization as energy has got more expensive. Third factor, I think, and again, different people will put different weights on this, is the UK story. Now, UK is only part of Europe, and about 16% in economic terms. But I think it's had a disproportionately kind of influential view on European economic debates by being a bit different to the norm. If you go back to around the year 2000, academic writers at the time, like Peter Hall, David Soskis, Michel Albert, a bit before that, still saw European capitalism as divided into two broad types. There was the UK and Ireland on one hand, the sort of Anglo-Saxon model, as they like to call it, the emphasis on shareholder value, individual success, competitive markets, short time horizons, low tax and spending, similar to the US, though not going all the way. On the other hand, you had the Western European Rhineland model, consensus, stakeholder interests, long-term commitments, skills, stronger social institutions, greater employment protection, and so on and so on. Now, there are pros and cons to both, and the pros and cons vary according to the circumstances. But there was a difference, and there was genuine competition, I think, between these models. And the single market programme and the programmes of reform that we saw across the EU in the 90s and 2000s up to the crash, I think were very much the kind of influence of the Anglo-Saxon model, if you like, on that. Now, what's happened since the crash is something different. And I think what has happened is that the UK model has basically disappeared. And there is really only one European economic model now. There are some variations on a theme, of course. Not every country is the same. But over the last quarter century, Britain has gradually converged with the continent, and indeed under the current government is continuing to converge in things like employment rights. And in one area, I think Britain has gone even further. Energy policy, the graph is still up there. Our form of net zero is particularly virulent, and our energy consumption actually is down to levels last seen in the early 1930s, incredibly. It was the last time energy consumption per head was at that level. And so I think these factors, the continentalisation of the UK, now particularly virulent form of net zero, are what produced that terrible growth performance in the first chart. where the orange bar basically disappears. And I think that the consequences of us sort of going off the pitch have been serious. There isn't competition between models anymore. And I think Europe tends to perform best when there is competition, when different countries are trying different approaches to things, learning from each other, exposing each other's failures. I think what we've got is too much uniformity in Europe now. Uniformity is often presented as sophistication, but in reality it just means that the bad ideas spread faster, are challenged less, and are harder to correct. A continent in which almost the elite class believes roughly the same things about regulation, migration, energy of the state, and so on, is a continent which finds it very hard to correct its course. And I think we can see a lot of that happening. So pulling this together, the principal causes, as I said, of the problems in Europe are high tax and spend, high energy costs, the absence of internal competition between economic models. It's not, I said at the start, I don't think it's mainly about the absence of supply-side reform, important those reforms have been. So in supply-side reforms, things have certainly not got better for a decade or so. They haven't got worse either. And if you look at the OECD's product market index, you can sort of see that. There's the wave of reform I talked about in the 1990s and 2000s, but then it stalls. It doesn't get any worse, but it isn't getting any better. So I don't think this can be a powerful explanatory reason for the deterioration in growth. That's why I think it's other factors rather than, gumming up of the markets. There's no doubt that Europe's performance is not great in that, and it could certainly be improved, but I don't think it's the main reason. So just to conclude, I said that the growth problem has to be set within a wider problem. And this is where I guess I part company with some free marketeers and even more with some libertarians about the nature of the problem. And I don't believe our problems are just about economics. I think culture matters too, and in fact they're linked. On a historical perspective, I believe Europe's and the West's economic success is fundamentally related to the emergence of the modern nation-state. It's no accident the great drive to success in the late 18th and 19th centuries happened first in the traditional existing nation-states and then spread. You can actually make a case that modernity began in the Netherlands in the late 17th centuries, which in many ways was the first sort of modern-looking nation-state and spread. So it starts in the Netherlands, then it's Britain, spreads to France. The new state of Belgium, gradually spreads across Europe in the 19th and early 20th centuries as the nation-state itself develops over that period. So these two phenomena are in parallel, and I think it's an unfashionable truth today, but one you can see very strongly if you look outside Europe, around the world. It's an unfashionable truth that nationalism and progress are closely linked. And why should that be? I think it's obvious that free markets, they require more than just contracts and prices. They require a willingness to experiment, change, to disrupt traditional ways of doing things. They require people to accept uncertainty and change in their lives. And that doesn't happen. People are not willing to accept that unless they're part of a broader cohesive community, unless they think that community can in some way protect them against the worst risks, and unless their confidence in the quality of government, so that taking risks pays off for them rather than being arbitrarily punished. It also requires them to know they can solve problems as they emerge, that democracy means something and elections can change things. And I think what we've seen in Europe, unfortunately, and again it's part of the problem, is the gradual decomposition of the nation-state. under two pressures. The first is the transfer of powers to Brussels, the disempowerment of national decision-making, promotion from above of particular ideological assumptions about government, economics and society. And all of that's happened without any replacement at European level either. There isn't a European state as such capable of commanding democratic loyalty. And if you're a believer in the European destiny of ever closer union, there's obviously a solution. It's try to create a European state and a European demos. It hasn't happened yet, and I'm not sure it ever will. If you're a non-believer in that, if you're one of the so-called populists in Europe, you have a different problem. You have to decide whether to accept the current European framework and try and steer it in a different direction by finding enough allies, or you have to decide to implement the changes you want nationally, probably against Brussels' opposition. And I think all the sort of populist forces in Europe face this problem, and unless they can come up with a good, collective, workable set of solutions to it, we will see growth undermined in Europe because growth is so connected to this nation-state issue. And the second pressure, and just winding up, second pressure is, again, the originally unfashionable but now willing to be talked about problem of the import of large populations from other parts of the world into our societies, from societies that have norms that are incompatible with them. And I think this process is changing what existing citizens think of their country. It's requiring the creation of new and sometimes unpopular national stories. It's undermining the bargains on which national welfare states rest. And in short, it's starting to undermine the factors which make a nation-state an effective arena for economic and political development. And confronting this, given the stage that we have reached, at least in Western Europe, is going to mean confronting realities which the political class prefers not to face. I think it's not the subject for today, but I do believe it's part of the problem in building the kind of cohesive national arenas within which economic growth can really take place in. So to conclude, I think solving these problems, the cultural, the political, the economic problems go together. Saving the West is a cultural and societal problem as well as an economic one. And I think that's why our situation is worse than the last great run of crises in the 1970s. Today, we face economic problems for sure, just as we did then, but we also have a deeper uncertainty about kind of who we are, how we govern ourselves, what the demos is, what democracy is, whether our countries still possess the solidarity that's needed for democratic capitalism to work. So can free markets save the West? Yes, but not on their own and not in abstraction from the society in which they operate. We need leaders who are willing to shrink the state, end the net zero madness, revive national democracy, defend the culture of the nation state. And we need to find some of them. If we can't find them, then the decline won't just continue, it's going to become a sort of settled and accepted condition. So yes, the West can still be saved, but we need leaders who are going to do it. And at the moment, let's conclude on this note. Where are the leaders who are going to change course? Thank you very much.
Well, I think that's one leader. I think we've identified one, David Frost. Now we're going to go to our panel discussion. And if I can call forward Barbara Combe, who's director of the Austrian Economic Center, president of the Hayek Institute, and former vice director of the Austrian National Bank, and now a member of the parliament in Austria. So Barbara, if you'll come forward. And next we have Drew Bond, co-founder and executive chairman, Conservative Coalition for Climate Solutions, C3 Solutions, who flew all the way from the U.S. So thank you for coming, Drew. Philip Pilkington, who is a macroeconomist and a visiting fellow with the Danube Institute. We will have Mr. Pastor join us later. And finally, our moderator, Matthias Vajda, research fellow, Danube Institute. And the title is The Importance of Affordable and Reliable Energy Supply for Prosperity, Perspectives from Various Angles and Nations. And going back to AI, I think the silver lining to the AI maybe bubble is we now have nuclear power has just been declared a green energy source because all of these people have figured we have to have a lot of energy for AI. So thank you very much, all you big AI people, for getting some sensible energy policy going. All right, yours, all yours. Welcome.
Thank you so much, Melissa. Ladies and gentlemen, welcome. My name is Matthias Vajda, and as you have heard, I'm one of the researchers at Danube Institute, and this is my pleasure to moderate this panel. This panel is titled "The Importance." excuse me for my blues voice. The importance of affordable and reliable energy supply for prosperity. As it was mentioned before briefly, at the most basic level, modern economies only function if energy is available, affordable, and of course dependable. Europe is currently attempting to manage several transformations at once. Of course, geopolitical realignment, industrial restructuring, technological transition, and of course we have the climate policy commitments. The key question is whether these processes can be aligned without undermining economic competitiveness and the system ability. Let me begin with a short opening round here. First, I would like to ask to each of you briefly, what is today the single biggest vulnerability in Europe's energy system? I mean, is it technology, supply security, price stability, or in terms of investment capacity? Barbara, may I start with you, please?
Yes, you may. Well, thanks for this panel, and I think it's when we planned it, we did not know what was happening and what would actually is going on right now at the Strait of Hormuz, and how important supply-side economics is again. And from a European perspective, the issues we see, I mean, this is a political constructed fragility. And we ran into this problem open-eyed, and with following the Green Deal, going into this transition mode without making sure that we have abundant energy available. And that is what we see these days. I mean, we are vulnerable. We thought it would never happen. I mean, talking about pretense of knowledge and the arrogance of thinking that we know everything. And we were in Europe not prepared because it was the political agenda was we need to change, we need to be, we need to seek for different sources of energy, we need to be more green, and it did not work out in the pace of that they wanted it to be done. First thing. Second thing. Not only politicians from Brussels made the wrong decisions, also our own nation states, and being a politician myself by now, I'm allowed to bash my fellow politicians in many other countries, especially those in Western Europe, because we depended way too long on the cheap energy. We knew it, but we thought, well, it's will be here forever, without taking into calculation that wars can occur and external shocks, as we know from economics very well. So that, having said that, we were unprepared, we made the wrong decisions, And we still do, because price caps in energy will definitely not help. And that's what our current politicians in the West are discussing. Sorry, the future doesn't look too good for us.
Thank you, Barbara. Drew, first of all, sorry for the bore at the beginning of the event, for my clumsiness. Sorry for that. So, what do you think about this, Drew?
So the question is about where the greatest vulnerabilities are in Europe, and I would say this also applies to the U.S. and the world. It's supply chain, and when you look at the United States, the minerals, mining, processing, and all that those go into. When you've got China, which owns 80 to 90% of that supply chain, you have a serious problem from a national security perspective, from an economic perspective. And so, I represent obviously a conservative climate organization. We believe in free markets. We actually think that the best thing you can do for the climate is to expand economic freedom. And the data and all the history show this, is that free economies are more clean, in fact, twice as clean as unfree economies. And so, but this gets to this whole issue of against supply chains, because in the United States, thankfully, we've had some major technological revolutions on energy, thanks to our entrepreneurial culture. We went from being dependent on the Middle East for our oil to now being dependent on China for our minerals and mining. The good news is we're no longer dependent on the Middle East for our oil, not as much as the rest of the world, thanks to natural gas and the fracking revolution that initiated that. So we're more abundant than ever on energy, but we're less abundant than ever on the minerals and mining processing that goes into so many things like energy technologies, national security technologies, medical technologies, you name it. And, it shouldn't be a surprise to us. I mean, China publishes this 5-year annual, 5-year strategy every 5 years, and they've broadcast this for decades, that this is their plan, and suddenly the United States is waking up. President Trump is trying to change this scenario. We're trying to bring back jobs, investments in mining and processing. But I'm skeptical. There's so many restrictions in the United States, and is also the case in Europe around, you're competing against China, which basically has little to no regard for the environment, where we penalize ourselves around everything from emissions of carbon to pollution to increased labor regulations. Now, certainly it's good that you don't want to pollute, right? We don't want to pollute, and we want to treat workers well. But this idea that we can suddenly compete on a level playing field when the playing field is already tilted in the favor of China is quite concerning.
Thank you, Drew. So, and finally, Philip, please.
Well, sadly, over the past few years, especially since the war in Ukraine, we've had discussions in Europe and America and elsewhere about the potential for a major energy crisis. Now, in 2022, we did have an energy crisis, but it wasn't of the same magnitude as the one that we saw in the early 1970s after the Arab-Israeli war in 1973, where we had shortages people would queue up at the petrol station or the gas station, as they say in the United States. I'm afraid that's probably here now with the war in Iran. In the past 24 hours, 3.2%, so 1/30th of the LNG market has been wiped out. And it's been wiped out for 5 years by Iranian missiles. That's in Qatar. Last night, in one night, you can wipe out 1/30th of the LNG supply. I don't think the people have even begun to stomach what this means. It's probably as large an energy shock as 1973. The market prices currently, the futures market's being manipulated, in my opinion. I don't think it's realistically pricing these things in. It should be trading at about $160 a barrel. I think we're up to 110 today, but what's becoming known as the Whale of Hormuz keeps coming in on Monday mornings and pushing the price down. You can speculate on your own who that whale is. So we're in a really bad situation now, a really bad situation, and I think people are only beginning to come to terms with it. A few other updates. I mean, it is kind of real-time updates at this stage. 2 hours ago, the Russians said that they will be restricting fuel exports, and they'll be doing that on a discretionary basis. So obviously the EU last week said that they'd consider reopening Russian energy, which was, I mean, the less comment, the better on that. And the Trump administration unlocked sanctions on the Russians. Well, the Russians are saying, yeah, we might not be able because we might have shortages ourselves. I'm guessing that they'll favor China over the EU anyway. China have about 250 days worth of storage built up too, so they can sit on their hands at least for a little while, I guess, but the prices are going to be really high. In the last hour and a half, U.S. Treasury Secretary Scott Bessent has said that he's lifting sanctions on Iranian oil that's already on the water. I'm not sure if that's a technical legal term. I haven't seen it before, but again, the less said, the better. I guess I'm just saying that the crisis is now here. It's not priced in at the pump yet. It probably will be in the next 2 to 4 weeks unless something dramatic happens. And I think we have to be realistic. There may be energy shortages. There may be queues. There may be energy rationing. I know that South Korea is thinking of experimenting with some sort of a work-from-home model. So we'd have kind of like energy lockdowns, I guess. That might be one way of coping with it. But, you know, it doesn't really matter what the futures market says. It's broken, in my opinion. It's completely broken. It's shocking what's happening in markets right now. But it doesn't really matter because if there isn't enough physical stuff, you can't create it. You can't print oil. You can print money. It's not always a great idea to print money, but you can print money for a while. If you print oil, for example, if you print dollars and sell oil short into the market, which may or may not be happening right now, it doesn't create any more oil. It's a physical good. So the crisis is here, and I don't think it's theoretical anymore. It probably started in 2022, but that was just a price shock. We were able to re-engineer the global LNG markets to get it. The United States are probably going to have to stop exporting as much LNG to Europe because there will be, you know, relative shortages in the United States, or not shortages. They'll need it for their own market. So we're kind of stuck, and I don't think that there's a short-term solution to this now. I think in the next 2 weeks we're going to start having some very difficult discussions about potential energy rationing and so on, which is unfortunate. But as the other two speakers said, these are a series of decisions that we've made over the past 15 years, or maybe a little bit longer. And the only thing we can really do now is to try and manage the current crisis as best we can, take a lesson from it, and over the next 10 or 15 years try and build out a more rational energy policy.
So we are before the energy crisis, or we are inside the energy crisis, because you used that differently at the beginning of your intro. What do you think? To make a short clarification.
I've called it the phony war moment of the energy crisis. So, you know, when World War II starts, the British are in the war, but basically nothing's happening. There's a few bombing raids being launched over Germany. Very high casualty rates in them, by the way. It's a phony war. Everybody in London is saying, we're at war with Germany. There's no war. We're in the phony war moment of the energy crisis. So, yes, the energy shortages are there. 1/30 of the LNG market globally was wiped out last night, about 16 hours ago. So we are in it, but we just haven't seen the manifestations yet. But the policies are beginning to come into place. Japan just put price caps in place about 7 hours ago or something.
Please.
The problem is we have not learned from the 70s energy crisis, especially when it comes to monetary policy. Remember the inflation rates that shot up back then, and then the wrong monetary policy with interest rates manipulation, and only until the mid-90s we kind of maneuvered it around again, and then we had the same issue 2000. With the dot-com bubble bursting that we heard earlier today, we saw that interest rates were going down gradually, and then with 2008, finally, they went negative again. And after that, following through all the negative consequences of unconventional monetary policy that we have seen, culminating in combination with the 2017 announcement of the Green Deal. And that was the first spark of inflation that we really saw. Energy prices already went up back then. This was long before the Ukrainian crisis, long before then. But if you give the wrong signals by politicians to the markets, then you distort the price system. And that's what we have seen first time. And then we had the lockdowns, supply chain, etc. again with COVID, and you triple the problem. And now there is an external shock that nobody has ever priced in. And I'm afraid you're right. We will not be able to manage this problem because we were focusing on one kind of good technology, green technology only, and we did not look into alternatives. We were not technology neutral, at least the West was not. And that is our big mistake now. And this is why we are dependent on whoever delivers whatever form of energy. I bet with you that we will go back to those mean forms of energy that we all said, oh, this is not good. And as Melissa said before, whoever would have thought that the EU would declare nuclear green and sustainable? I mean, this happened last year. And 2 years ago, nobody would have ever thought this possible. So
coal will be next.
Yeah, exactly.
Yes,
we'll
true.
go back to that. The Germans will use their old coal mines again, I bet, since they've shut down the nuclear power plants.
Probably that's the situation. So, Barbara, let me stay with you for a moment. Are current European energy policies creating new structural dependencies? Because you just mentioned some, rather than genuine energy security. What do you think?
Well, of course, we have not made our homework when it comes to grids and to infrastructure. This is the first big thing, the big problem that we've seen. We have another issue when it comes to storage, not only batteries, but general storage. And then we have a big issue, at least part of Europe can sustain with hydro. And we have not allowed to expand this clean technology because, again, of political intervention from the green side. So, again, we've shot ourselves into both knees at the same time. But the worst is actually this lack of infrastructure that we were unable to build. And on a side note, the so-called Sondervermögen, what Merz has announced to build infrastructure but also invest in military, this 900 billion, they were already used by now up to 95% to service debt instead of investment into much needed infrastructure for energy supply as well.
Yeah, thank you. But just one thing that in energy debates we often hear the term of dependency and interdependency. Yeah. And they are using it interchangeably. May I ask you to, of course, from the policy perspective, what is the meaningful difference between the two? Just shortly, please, for the audience.
That's a hard one. I know that from Austria, because Austria is, of course, transitioning energy from electricity from north of Germany and also from the nuclear power plants of the Czech Republic to the south. We are a line in Carinthia, further down to Slovenia, to the Balkans, but also part of it to northern Italy. And there we literally have a gap, a bottleneck, because only so much of electricity can be passed through, and we were unable to open this bottleneck. And this is the case in many other countries in Europe as well. So
that's it. Yeah. Thank you, Drew. Let me turn to you. Can market-driven energy transition realistically deliver both decarbonization and a reliable baseload supply? and of course, most importantly, what happens if they don't?
Yeah, so first let me address the word transition, because I think it's been a false pitch that we're transitioning from fossil fuels to renewables. And even if that were possible, then you have to ask the question, is that a good idea? Again, if most of your solar panels are made in China, and by the way, I have a solar company, I'm not anti-solar. It just makes more sense in Arizona than it does in Germany. All right? So if you're going to move from one form of energy to the other, you better evaluate your trade-offs and understand what your supply chain issues are. And so this idea that we're transitioning from fossil fuels to renewables, frankly, makes no sense. I'd like to throw out the net zero language and bring in net abundance language. I mean, we need abundant, affordable, reliable energy, and electrons should not be religion, but it has become religion. And the other thing to keep in mind is electricity is only 20% of the global energy picture, right? So this idea that renewables are growing exponentially, well, they've grown for sure. But globally, renewables, solar and wind in particular, which is usually what people think about when you think renewables, solar and wind only accounts for about 4 to 5% of global energy. Now, it accounts for more than that for electricity, but global energy, 4 to 5%. So, in other words, we simply cannot power our economies and the growth of prosperity for the benefit of people around the planet on electricity derived from solar and wind alone. Now, batteries are coming on scene. Batteries are getting better. Batteries are getting longer and longer duration. Well, guess who owns the supply chain for batteries? China. So, there are technology innovations happening. There's a lot of what I know well as American companies where, long duration batteries are coming online that don't require lithium, that don't use a lot of water, that don't have moving parts, that have low capex. So there's some promising technologies, but they're not at market scale yet. And so I think the jury's out as to how those will turn out. And then I think where the jury is very much out is, can we avoid the playbook of the past? America invented the solar panel. China invented scaling manufacturing to drive out American businesses and then help the United States become more dependent on Chinese solar panels. So can we avoid that storyline again with battery technology is one big question. So I think we've got to think about these things from that perspective. But I go back to your point that, again, we're not transitioning to anything. This is really about when you look at, I was born in 1970. So 56 years old. Right, 1970, I remember, when I was around 10, waiting in line to get gas on the odd day of the month. And for me, it was kind of exciting as a kid because our license plate was odd, and so we got to get gas that day. Fast forward to, when I joined the U.S. Department of Energy in 07 and 08, we were fighting a war in Iraq. We were dependent on the Middle East for our oil and had not yet invented fracking. Oil was on its way at $150 a barrel. Here we are today fighting a war in Iran. Oil's at 100 on its way up to 150 a day. The good news is we at least now have natural gas in abundance that we didn't have before. If we didn't have that and we were solely dependent on China, God save us. And then the other thing I would say is the energy mix from 1970 from when I was born to today really hasn't changed that much. I mean, we've got more natural gas, less coal. We do have more renewables, but again, it's most of the renewable picture are things like hydro. Solar and wind certainly has come online, but in terms of the global share of energy, they're just barely scratching the surface. And so where we've lacked quite a bit of an opportunity to grow is on nuclear. And so, when you see, thankfully, this change in perspective around nuclear finally being clean, that is finally a good thing because, you need baseload power. But I think there again, you've got to look at all these forms of energy as trade-offs. Every one of them has a trade-off. So anyway, I could go on forever on this, but I'll stop there for now.
Thank you so much. Now, market design, Philip. Don't be scared. So, about the market design dimension, does Europe's current electricity market structure amplify volatility rather than stabilize prices? What do you think about it?
In terms of the overall regulatory market, you mean? I mean, I don't think the regulatory market aspects are the key problem in Europe. I mean, obviously, any regulations that they put in place that try and push people into green energy or anything like that are a problem. But I mean, the way that they're trying to set electricity prices or something, I don't think these are. Brussels bureaucrats would love if that was the problem because it would have a simple solution, right? But they're just not really. They're not really the problem at all. The problem is on the supply side. I mean, it's simply a supply side issue. To speak to the previous question, for example, to the extent that green technologies have been shown to work at a very high percentage of overall energy generation in the country, I think the two countries in Europe, anyway, that came quite far on that were Britain and Germany. And what we saw with those experiments is that the renewables are effectively, quote unquote, subsidized by natural gas, right? So if you have a very relatively large amount of renewables, you'll usually have a very a strong dependency on natural gas. And of course, now what's happening in the Middle East, the country that I think in Europe will get hit the hardest will be Britain, obviously, because of the contingencies of its natural gas supply. Well, Ireland too, because it basically gets its gas from Britain. But they'll be hit very hard, and Germany will be hit very hard. So effectively, I don't think this is a technocratic issue, as it were. Like if you're talking about market design, for example, it's kind of technocratic. The one thing that maybe I'd say about, but again, it touches on the supply side issue as well, is that, for example, the EU have this scheme called Repower EU. It's their idea to get rid of Russian gas or something, whatever they were thinking about last week and changed their mind 4 days later. But basically, it did outline some of the EU's thinking in a clearer way than you may have seen before. And they have a fantastical view of energy markets and how they work. I mean, we're doing some work on it at the moment, and one of the things you notice from a Central and Eastern European perspective is that the energy infrastructure here was built during the Soviet Union, and it was built with a geostrategic mission in mind, which was to ensure that the Soviet bloc countries relied on the center of the Soviet Union, which was, of course, at the time Moscow, for power. And so the entire energy infrastructure in the Central and Eastern European, the former Soviet bloc region, is built with the express goal of keeping these countries energy dependent on Russia. You can't change that overnight. That's not the case so much with Western Europe, for example, which kind of were dipping into Algerian gas fields and so on. Norway was a big component. So, but Brussels, when they think about energy markets, they don't even factor in that reality. They don't even dust off a history book and learn that the Druzhba pipeline that's coming in through Ukraine to here, the reason that they didn't put that under sanctions at the beginning of the war was because somebody at least said, those countries actually are reliant on old Soviet infrastructure. Oh, well, can we change that? Well, yeah, maybe in 20 years or something like that. So there's I think, to go back to the original question, I think the European technocrats would love if it was some bureaucratic regulatory issue. I'd say if I could come up, I'd say there's probably papers out there that say it's about market structure or something, and they go, oh, well, if we just introduce this new department in the European Commission, and they'll set the prices slightly differently, and they'll introduce efficiencies into the price setting mechanism. I'd say they'd love that, but the reality is that they have no idea how to secure their own energy
take it seriously.
supply.
It's irony. I guess.
Of course. No, but they would. They would actually love for that to be the case. And actually, when you look at European Commission discussions, it's often about that. It's a bunch of economists in a room saying, how can we best replicate a market structure to, within the European... It's all rubbish. They completely ignored the supply issue, to the extent, as I said, that they don't even seem to understand when they put together Repower EU, that, I don't know, a quarter of the entire EU rely on Soviet-era energy infrastructure. I mean, very unrealistic.
Thank you, Philip. Now, let us step back a little bit and look at the broader strategic, let's say, implications, competitiveness and system limits. Is Europe at risk of losing industrial competitiveness, or maybe it already has, because of structurally higher energy costs, or let's say capacities, compared to the United States or Asia? Please, Barbara.
Yes, we have lost, and we have shot ourselves in both knees at the same time, not only starting with the Green Deal, but with the central planning that Philip was just pointing out. So you didn't say central planning, but for me, Brussels is a bunch of central planners.
They say market-based central planning.
Well, it doesn't exist market-based central planning because it's either market or central planners. And we have to go back to Hayek with his Road to Serfdom 1944, where he explained that those things don't work. But obviously, too few people in Brussels read Hayek. They should. But again, to your question, yes, we have destroyed our competitive basis, not only because of this overregulation and because of this wrong policies that have come out of Brussels, that so many of our nation states followed voluntarily without thinking and acting and, just delegating it and thinking, Brussels will solve it. No, they haven't solved a single issue. With what we have seen from the very beginning, the migration. Well, let's start with the bailouts and the European Stability Mechanism. They have not solved the sovereign debt crisis. It's upon us, our nation states, to solve this ourselves and not Brussels. First thing. Second thing, migration crisis. No, Brussels has not solved it. Brussels hasn't made it, and Germany, in that case, has made it worse. Hungary, luckily, did not follow through, and you were saving at least half of the West, but many of them came, of course, to Austria and then further on. So the migration crisis is also one reason. Next thing that I already mentioned, the Green Deal came out of Brussels. No, and we followed through. Look at the German industry, the car industry. Following through with the wrong incentives, providing subsidies to an industry just in order to make sure you go green, you go electric, and you change from one day to the other. The entire production plants and the entire production process doesn't work. You can only do it with subsidies. Well, now they ran out of subsidies. What happens? Those companies close. And then the fourth thing is too high taxes. And the labor costs are way too high in Europe. So what does a thinking and acting entrepreneur or a manager do? Well, he outsources. He goes somewhere else. He goes to places where both production and labor costs are much cheaper, and where they don't have those regulatory burdens that we see, that the German industry sees and follows through. So yes. We have shot ourselves out of competitiveness. And in addition to that, other continents don't sleep. They don't watch and see, Europe is doing so great. They are such a beautiful place on earth. Maybe they should just keep their tourism up alive. But if we don't have people who are productive and who want to work, then sorry, you wouldn't even have our tourism working. And having said that, we lack productivity in Europe. And this was in addition to what we have seen after COVID, with the lockdowns, people working from home or not working from home, and not getting them back into the production of processes. Our productivity is totally down. Today the OECD report came out for Austria, but it's true for France, Germany, even Italy, despite the fact Italy is doing better. But Spain, our productivity rates are way below the rest of the world. In Austria, just to give you the last example on that front, our per capita productivity in the private sector is lower in 2025 than it was in 2005. So we lost 20 years. And that is true for the west of Europe, and we did not talk about the energy that we cut ourselves voluntarily off, that cheap gas that came from Russia. Within like 4 years, we had those cheap imports that were above 60% are now down to 6% from Russia, but we are relying, as you mentioned before, on the solar panels from China. So we exchanged one dependency with another one. That's not good.
Thank you. Philip, what do you think about this? You have any comments on this? That's a lot, thank you.
Yeah, I mean, look, we did some studies. We did a study that we put out 2 weeks ago at Hungarian Institute of International Affairs, trying to calculate how much of an impact the Russian sanctions had. So that's the most recent shock. But I think it's kind of a reasonable shock insofar as it was.
Excuse me. Sanctions. So beyond the Repower EU, you are saying that, right?
Yeah, so in 2022, obviously, we put sanctions on Russia. They responded by effectively cutting off the gas. A pipeline called Nord Stream blew up. We still haven't figured out who did it. It might have been Finding Nemo, we're not sure. So basically, the loss of that gas, which is, I would say, is kind of the crowning achievement of EU policy, because they became dependent on that gas. It was a reasonable source of imports. I'm not making a value judgment, but basically, what we found was that that it's already impacted the EU by about 2% of GDP. So, given current rates of GDP growth in the EU, that's probably about 3 years worth of growth that's been wiped out by those energy sanctions. But more worrying, because the thing is, the short-term impact of energy isn't actually as dramatic. If you hear 2% from the loss of Russian gas, you think, oh, well, that's not that bad, really. I mean, if we could get the economy growing back on track, that would, we could grow that back in a year or two. But in the long run, what we found is that the impact will probably be about 11%. Now, that means Europe becomes, quite poor, actually, if it loses, 11% of GDP growth. At current rates or in recent rates, that's probably everything going back to, 2006 or 2000, something like that. I mean, kind of crazy to think through. Yeah, and this is due to the deindustrialization. I mean, that's how it impacts. So the mechanism is that the higher price impacts manufacturing, employment, basically. That's how you do the modeling. I won't get into the boring details of that. What's really interesting is I referred again to the Repower EU document. It's not a good document, in my opinion, but it at least clarifies what the Brussels bureaucrats are thinking about in terms of energy policy. And what's absolutely fascinating is, the goal of the Repower, some of the Repower studies that come out around it, are to model the price impact of switching from Russian gas to American LNG, which is substantially more expensive. And here's the really interesting thing. In all of they say that it can work and everything like that, that's great. But in all of their assumptions, they assume a stagnant economy. So apparently, the ECB is putting out growth forecasts of, I don't know what they're doing, 1.5% a year, something like that. They're saying 1.5% a year. So the economic officials are saying to the European Commission and to European citizens, oh, don't worry, once all the chaos is over, we'll get 1.5% a year growth. The energy economists that are working on energy strategy, the Repower EU guys, are assuming stagnant growth. So which is it? Is it stagnant growth or is it 1 to 1.5%? They're not even talking to each other in this. But my feeling is that it's the energy economists that are correct. Even if we hadn't had the shock of the Iran war, and we continued on down the path of trying to switch out Russian gas for American gas, you would basically have a stagnant economy. And according to our modelling, I'd say by about 2032, we would have been down about 10%. So a substantial decline in living standards over time. And that seemed like actually what the reality was from switching from the Russian gas to the American LNG. Well, that's just got worse with the Iran war. We don't know how bad this shock's going to be. I'm pretty sure it's going to be worse than the Russian shock unless something changes dramatically. But there won't be anywhere to turn. And so at that point, I mean, with the American LNG, which gas is very, very important for industry. Obviously, it's one of the main ways to power industry. With the American LNG, you were paying a much higher price. I think it's about 40% more than Russian piped gas, unless that's come down a little bit. But it hasn't come down much. It must be over 30%. But at least you got the gas. So you got an expensive gas, but you got the gas. Now we'll be facing down a situation where there might actually not physically be enough gas. And that means that you have to engage in some sort of rationing or something like that. And that's where the deindustrialization could get very intense. I don't think there's an easy way back now. I think we actually have locked ourselves in the path. If we'd had this meeting before the Iran war, I would have said, I think you can still open the Russian pipe gas. The AfD, or not even the CDU in Germany, some CDU members were discussing repairing Nord Stream, and they put out a cost estimate a few months ago. And I would have said, if you got Nord Stream back online, and you could convince Russia to send that gas, which is not, you can't assume, then yes, you could probably get back on track. And at that point, the 2% GDP loss that we modeled was probably the extent of it, maybe a tiny bit more, 3%. And then you'd gradually kind of bounce back, and you wouldn't lose that 11%. Unless something drastic changes, or in the Middle East right now, I don't think we're gonna. I think we actually are locked into a deindustrial path, and we'll probably have hemorrhaged a lot of those jobs by about 2032. At least that was the modelling assumption.
Thank you, Philip. Now let me turn to Drew. Can rapid technological change from renewables to rising AI-driven demand outpace the ability of grids and regulatory systems to adapt?
So, I mean, what we're seeing right now is the demand for energy as a result of, on the one hand, everything that we need energy for, but then certainly because of the growth of AI in data centers. That demand is far outpacing the government's ability to act and react. And so even before the advent of AI, I mean, we were working and been talking about the problem of permitting reform. You know, if you wanted to permit something in the United States, whether it was a pipeline or a nuclear power plant, even a solar farm, could take you everywhere from 7 years to never, right? And there was a stat recently that I heard from the CEO of a Williams company that said the cost of regulation, just getting the permitting for a pipeline in the United States, is twice the cost of actually building the pipeline. So that shows you the state of our regulatory structure and the layers upon layers that exist to get something permitted and constructed and commissioned. What's definitely changing, you know, as a result of AI and data centers is they need as much energy as fast as possible. They're looking at co-locating facilities, everything from nuclear and data centers to solar and batteries and data centers, behind the fence, every other side of the fence, right? I mean, you're seeing these companies begin to partner with fusion companies, and you wouldn't even have fusion online yet. When you look at the energy demand from data centers, it's projected to double by 2030. And the investment is, I think McKinsey or somebody did this analysis, that is somewhere between $6 and $7 trillion required for the data centers of which another 1 to 2 trillion is going to be needed for the energy to supply those data centers. That's a wonderful, beautiful market force that will drive innovation forward. The question is, how fast can the government get out of the way? This is where I am an entrepreneur. I am optimistic, but I'm skeptical on the government's ability to get out of the way. And even in the United States, we have, although majority run by Republicans, and the White House, it's a very thin majority. I think many members of Congress still think they come to Washington to pass laws, and I wish they would actually come to pass laws to get rid of laws. Because that is actually what is constricting our ability to build things. And let me just give you a couple of little small examples. But again, so I have a solar company. We're doing a project in Colorado. Colorado's got great sun. Electricity prices are relatively high, and so it can make a lot of sense there. We're working with a small rural co-op, so it's like electric utility, but for a small community. And they wanted to actually replace an old distribution line, electricity line, with, like a 40-year-old line with a state-of-the-art line. Right-of-way already exists. Poles already exist. All they want to do is put a new line in place of the old line. They applied at the end of 2023 to the Bureau of Land Management, because the Bureau of Land Management has responsibility over this because it goes over some federal lands. And the last time I talked to them, their application had not even been reviewed yet. So this is the madness that we live in. Now, the good news is, under the Trump administration, they have a Secretary of Energy, Chris Wright, who's awesome. He's a friend. He's truly tech neutral. He cares a lot about energy abundance and affordability and reliability. You've got an Energy Dominance Council that is trying to cut through all these regulations. But we'll see how long that will last. And we'll also see, when we have another election, when the pendulum swings back, is the green left going to try and, basically stick it to the fossil fuel industry again? And, this is where, there's just, we need to get beyond the, religion of energy and recognize that it is a necessity of life, and there's practical trade-offs. And I think we would all say we want as much energy as we can get, as affordable as we can get it, as clean as we can get it, and ever cleaner. But, we shouldn't think that we can suddenly turn off the fossil fuel spigot, turn on the renewable spigot, and suddenly the world will be better.
Thank you so much. So now we will step back a bit. Throughout this panel, we have talked about security of supply, rising costs, investment constraints, and of course the pressure of technological change. One could argue that Europe is trying to transform its energy system, while the economic and physical foundations of the systems or the system are still under significant strain. Is Europe attempting an energy transition at a speed that its infrastructure and political tolerance cannot realistically sustain? Szabolcs, what do you think about this question, please? And also, that's it for now.
Thank you so much, and thank you so much for waiting for me. Actually, in the afternoon, I was building the international relationships because one of my PhD students had a final or public defense. He's from Cameroon, and we have just finished the defense, and I'm so happy to join this panel discussion. But let me go back to your question. Well, when Hungary fulfilled the European Union presidency status, then the whole half year was concluded in a Budapest Declaration. That was the name. And if you open that declaration, something was clearly written. In Europe, we pay a high price for energy. Energy prices are 3-4 times higher than in the US. If you make a comparison now, we have to forget about 3 or 4 or 3 or 4 times, it is much better to talk about 6 times at least. And starting from the 2020s, we are living in a polycrisis world or situation. And when we focus on the energy market, we have an extra or an additional or a supplementary polycrisis. It is because, for political reasons, the pipeline connecting Hungary and Ukraine is closed. There are sanctions on the Russian oil, and there is the Iranian war. So things got a lot worse, I have to say, in, 2 years. Let's say so, 2 years, and we are paying a heavy price for energy. We lost competitiveness already, and now we face a much bigger competitiveness pressure. I'm pretty much sure that you have mentioned Ursula von der Leyen, and I'm sure that you mentioned that she had confessed that it was a huge mistake to turn off nuclear power plants.
It was called a strategic mistake.
Yes, strategic mistake. Not only a huge, but a strategic one. That was indeed a huge mistake. And I think when we talk about numbers, when we talk about economic rationality, I think in a couple of months, years, I don't really know, the European Commission, maybe not her, but someone from the European Commission may say that it was a strategic mistake to get rid of the Russian oil as well. I think a couple of weeks ago, the Americans lifted the ban on Russian oil, not because they are friends or they try to embrace each other, but because they were following economic rationality. So it is not about animosity, friendship, and hatred, and so on, and so on, and so on. This is something about pure numbers and pure economic reasoning and rationality. So if you ask me, I would say that it is very saddening that, Europe built much technology on cheap energy. We no longer have that cheap energy, and we are losing the competitive advantage in the automotive industry as well. If you don't mind, I tell you that I love numbers, and I have one very telling. At the BYD, they have more engineers working in the automotive industry than in France and than in Germany combined. And I'm talking about one Chinese company only. And let me tell you something else, or one related one. In China, it takes less than 2 years to develop a completely new car. And even the French outsource development of cars to China. So we lost the cheap energy, and also we lost our technological advantage. And one last point, in the next 15 years, 30% of the car engineers will retire in Germany, and there are no replacements. They have trainings at the universities, but those trainings are focused on something else, not on training engineers, for example, IT specialists, and so on and so on. So things, questions, dark clouds are gathering over the horizon only, and things got much better in the last, 2 years, in the last 6 months. Let's hope there will be some light at the end of the tunnel.
Thank you. Barbara, do you agree with this? From the institutional and policy perspective, what do you think? Is the space itself becoming a risk?
Sorry, is?
The pace.
The pace. Well, the pace, we are destroying ourselves is super fast. Another example, Austria 7 years ago was among the 4 leading economies, and a country that was really thrifty and careful when it comes to spending and bureaucracy, etc. Within 7 years, a government formed by the conservatives, supposedly conservatives, and the Green Party, we lost totally out. And the last year, with the government formed by the so-called conservatives, the Social Democrats, and the Neos, which are socially, are more on the side between conservatives and Social Democrats, we are now the last in all rankings in Austria. So within 7 years, you can come from one of the top countries down to the very end if you fulfill or if you follow wrong policies. That's what we have seen here. But the same is true for Austria, for Europe. We have not discussed yet the Letta report and the Draghi report. Both reports provide the right analysis, but the solutions they provide is again more central planning, more top-down, more regulation, more building of more collaterals, and intervening in the monetary system again. So we will not get anywhere unless we will finally hit the wall, and I think we have reached a moment right now, a very critical moment where hopefully we will wake up. And if von der Leyen says, "Well, it was a mistake that we shut down the nuclear power plants," she should have said that long time ago. First of all, they should not have shut them down, and second, she should not have followed all those wrong policies. They should have said, the Green Deal was a mistake. Let's shut it down. Let's stop it. Let's get rid of the CO2 taxes and those emission taxes. And we were discussing CBAM today earlier. All these policies are wrong. Why do you think that the rest of the world, whether it's the US or the Latin Americas, led by Milei and Cast in Chile now and others, stop this policies that are not only Keynesian, to put it mildly, but it's literally central planning and destroying our enterprises and the risk-taking companies that have brought innovation, and we do not innovate any longer in Europe anymore, and that's the issue. One last thing, the multi-financial framework also needs to be discussed when we look at Europe. This is additional taxes for European taxpayers paid directly to Brussels and not only to our capitals. So on whether it's the taxes for tobacco, for gaming, and many other taxes that they have invented that we pay on a national level, but in addition now that are due to Brussels. And this will definitely also not save our business location and our labor location. So, it's really, sorry to say, very doomy right now in Europe, but maybe this is a shock that wakes many people up, and that the individuals right now, when they face this energy shortages and that politicians don't have the right answers, that they kind of rethink and say, okay, let's go back to the good old times with Ludwig Erhard, when when we didn't have price tags and price caps on products, when markets were flourishing, and those ideas need to be reinvented or coming back to the ideas of the individuals again. So, going down and going up again, but it will take a while.
Thank you so much. Drew, do you see this risk overstated?
The risk overstated? Which risk?
Yes. The risk that we were talking about, the transition, and how the infrastructure and political tolerance cannot sustain this problem.
Well, let's see. How do I answer that? The risk is pretty great. If we're talking about governments picking winners and losers, governments committing to things like green agendas that don't take into account the technological trade-offs and the economic and and international supply chain security trade-offs, that's a very high risk. And, frankly, we saw this play out in Germany. Right? I mean, Germany decided to, shut down its nuclear power plants, get off coal, right, get on Russian natural gas, and it created a vacuum in Ukraine so that Putin could create his own war there, right? Now, I know it's more complicated than that, but I try to think pretty simply, and that's basically what happened. Now, so the risk is extremely high. Because we're talking about energy security, which goes into every form of your economy. The politics of this are certainly complicated. They shouldn't be that complicated, but the left in the United States and the environmental left globally for a long time has preached this gospel that if we just get on more solar and wind and get off of fossil fuels, then the world will be better. And it's just a strange fallacy. I mean, again, I have a solar company. I have a Tesla. I also have a hybrid vehicle. I also have a, gas vehicle. I want options. And this idea that, like solar panels are great because they do generate electricity when the sun's shining and they don't emit anything into the air when they're producing that electricity. But they do have emissions in the manufacturing and processing of all the materials that go in it. So you've just moved your pipeline from the end of the line to up at the stack where you're making all the equipment that goes into it. This idea, again, that we're suddenly making the world cleaner by going off of fossil fuels and onto renewables is just a fallacy, and it's frankly just not even possible. But there's other areas where I do, again, want to be optimistic because I look at opportunities across the world. You mentioned hydro. I mean, in the United States, our hydropower fleet of dams, if we upgraded those old technologies with new technologies, we could double our power production using hydro. Now, what stopped that in the past were actually the environmentalists. So here's where, our environmental friends need to come around a little faster, that, if you really care about the climate and you say that's the top issue, then we need to consider things like, can we actually do more hydro? Can we do more nuclear, right? Natural gas actually is responsible for reducing our carbon emissions globally faster than any form of technology in history. And yet, many environmental left would want to keep natural gas in the ground as opposed to propagate it globally. So, I think I think the politics are complicated because politics is downstream of culture. And so, as was discussed earlier, we've sort of, educated young people into thinking that the climate's falling. And so, therefore, we need to, get on all renewables. You've got Greta Thunberg out there, sailing the world saying she's going to save the climate by her protests. And she just, clearly doesn't know math and doesn't know science and doesn't know economics and doesn't know engineering. But, again, let me be optimistic because, there is a lot of gloom and doom in terms of this. The clouds are forming. But before the natural gas fracking revolution, no one ever could have predicted that would happen. I mean, I remember being in Oklahoma at the Oklahoma Corporation Commission, which is the regulatory body for all oil and gas. And oil was $12 a barrel. I could fill up my Honda Civic for about $10. And there was this guy named George Mitchell in Texas investing in going deeper to get gas. And I remember thinking, most people were like, this guy's crazy, right? Why would you spend more money to go deeper to get cheap gas when it's already so cheap? What he knew, and frankly, his persistence and some good market timing unlocked the abundance of natural gas that has now, benefited us greatly. There are other technologies like that, like natural geological hydrogen, which exists. And so we're not talking about actually making hydrogen from energy, but instead just finding it. It exists, and it often exists with things like helium, which the United States has a shortage of. So, there's a possibility for those types of things, or I mentioned the battery technologies earlier. And, batteries were becoming more and more of an issue because of their lithium, because of their need for water, because of the reliance on China. But newer battery technologies are now coming online that don't need any of that, as long as we can continue to make those things not in China. And they're not all in the United States. I mean, the UK actually has a great company that is now in the process of scaling globally. So anyway, I want to be optimistic. I think innovation can get us so far, so fast in terms of what we need for energy and for prosperity, but we really need the government out of the way for the most part.
It was a relief to hear an optimistic voice after the others. So, Philip, what do you think about these?
Well, I'd just add, I'm going to be more of a doomer. On the nuclear issue, so of course, as you say, von der Leyen has said that it's a strategic mistake. But, they're only beginning to dust this off. So they pretty much made nuclear a taboo. I never really understood why. It's a relatively clean energy source from their perspective. It was pretty functional once upon a time. It's a big capital expenditure, so governments usually like doing those sorts of projects. So I don't know why. I think it probably had to do with nuclear disarmament movements in the 1980s, latching onto green, scary movies about nuclear explosions, Chernobyl, etc. So it was probably some sort of a collective mythology that put the taboo around it in the first place. It certainly didn't make any sense from the point of view of people who are concerned about man-made climate change or anything like that. So now they've kind of started to lift that taboo, but in the meantime, between when we were told, by the Simpsons that the nuclear would create a four-eyed fish or whatever it was, since we were given that vision in the 1990s and Captain Planet and so on, and today, a lot has changed in the nuclear industry. Western countries can't build nuclear anymore, not at an affordable rate. No Western country can build nuclear at an affordable rate. The United States, France, Britain can't even build it anymore. It built the first nuclear power plant in the world in the 1950s. It can't build nuclear power anymore. Westinghouse can still build it in the US, but they go way over cost. They go way over time. And even if you want to build one of these over-cost nuclear power plants, you can't get financing for it because nobody will finance the equivalent of a 30-year high-risk bond, in effect. They'll finance a government 30-year bond. I don't think they'll finance a nuclear bond, if you think about it that way. For example, Britain have been trying to build this nuclear power station since, I guess, David Cameron's government. The Chinese were involved. They were financing it. They were co-building it. And Theresa May came in and pressure was put on her to exclude the Chinese. It hasn't been built since. I think it was called Cedric. Hasn't been built since. It's still incomplete. It's in mothballs. The only countries in the world right now that can build nuclear energy to cost, as in that it's worth building, are China, Russia, and strangely enough, India. Now, out of those two, only two countries will build you a nuclear power plant. I don't think India have built a nuclear power plant in another country. Russia build them externally, and China build them externally. The Chinese ones are cheaper than the Russians. The Russian ones often go to post-Soviet countries because their nuclear is already Rosatom, in a sense. But those are the realities. So if we get back in Europe now and we say, okay, nuclear is great, we don't believe in the four-eyed fish anymore, we don't believe in Captain Planet, let's go and build a nuclear power plant, they're going to turn around and they're going to say, okay, how do we do this? And they'll presumably turn around to the French, because they're still the most competent at building nuclear power in Europe, and they'll look at the bill and they'll say, this isn't worth it. We can't invest in this program. And then if they're really desperate, or if electricity prices go up, and they make these French nuclear power plants worth their while, then they'll say, okay, how do we get financing? And they'll say, well, the Chinese will finance it. Well, they probably won't, because they'll want to co-build it. So there are all these crises in nuclear. I'll say very briefly why this is, by the way, because I was very curious. You can't find an answer on the internet to why this is. It's very interesting, underexplored terrain. So I asked somebody who used to work for Westinghouse in the United States, or I think still works there, or I'm not sure. Anyway, they were in and out of government in Westinghouse. And he basically said that in order to build affordable nuclear, you have to maintain momentum. It's an industry which you have to keep building. You have to build a certain number a year, and then you get the cost down because you know how to do it. And if you don't build a certain number a year, You don't know the kind of engineering tricks and traps. And so you go in with a big plan, and the plan doesn't work out, and you end up going over cost, over budget, over time, etc. So that adds another layer to this. You can't actually restart Western nuclear industries without just restarting them, in a sense. So there's a little bit of a paradox going on here. So when Europe actually dust off the nuclear issue, and they want to get them built relatively quickly, they'll be faced with two options, as far as I can see, Russian or Chinese. And those have all sorts of political and geopolitical ramifications.
Thank you, Philip. Szabolcs, you have a comment?
Yes, just a quick comment. I think many of us still don't understand why the Germans keep such a huge distance from nuclear energy. I have to tell you that Greens were really good at translating this nuclear energy issue into one single question in Germany. And that question was the following: can you live in a country where there is much nuclear waste? And this is how they presented the whole topic. And many Germans said, no, I don't want to live in a country where they keep nuclear waste. This is one thing. The other thing what I want to highlight is that starting or restarting a nuclear power plant is not like restarting a gas power plant. It is very far from turning on or pressing a button, basically. New certificates are needed, new supply chains are needed, manpower is needed, and in Europe there is very little manpower these days. Trainings were simply terminated. It will be very difficult to restart those nuclear power plants, and I can confirm what you said. Many new plants are opened in India and China especially, and apart from this, they are really good at burning coal as well. Every single year we have new world records. We burn more and more coal just because they are ravenously hungry in India and in China. Until the West, many simply think that we no longer use coal for electricity production, but that is not true at all. Thank you.
Thank you, Drew. Maybe you have a reaction.
Yeah, I just want to chime in. So, one, to the historic aversion to nuclear and the environmental left on this. Ironically, nuclear is one of the safest, if not the safest, forms of energy in terms of the number of lives lost due to it. So in spite of Chernobyl, in spite of Fukushima, again, and then the further good news is newer technologies are coming online that are essentially fail-safe. So, a traditional nuclear reactor, if it fails, then you have a really big problem. New nuclear reactors within the small modular reactor industry, the SMR industry, there are technologies that literally failure means they shut down. They don't go boom. And there's something like 80 companies in the United States around the world working on these SMRs. The first of a kind will come out more expensive than what is being forecast. And they're going to run into all kinds of permitting challenges, which, I think they're underselling at the moment. But there is a good wave of momentum around that. But to the point about labor, we built this large nuclear facility in South Carolina and Georgia area, eastern United States, that went like, I don't know, I lose track of the figures. It went at least three times over budget, and it took 3 or 5 times as long. It sucked up all the electricians and pipe fitters and concrete labor, which is great. You employed all these people, but all of that expertise literally was at one facility. And so we need a lot more of that everywhere around the world. And so, again, as an entrepreneur, that's the opportunity. That's the problem we have to solve, but you cannot solve this overnight.
Thank you so much, Drew. So as a conclusion, I would like to ask all of you a forward-looking question, which is, what is one concrete policy decision that could significantly improve energy reliability in Europe within the next 5 years. And I would like to ask to conclude briefly, please. Barbara, first.
Open technology, less intervention by government, more entrepreneurial spirits.
That was brief. Drew, please.
I would agree with that, and then add, I mean, it's specific technology, resource-wise, I think nuclear, so I think something like a third of the nuclear power plants in Europe are at risk of being closed in the next 5 years. One, keeping those open is key, and then ever since Fukushima, Europe has closed something on the order of 3 to 4 nuclear power plants per year. And that's going to continue, projected to continue till 2030. So we need to reverse that. In some cases, those decommissioned plants can be recommissioned, but in other cases, those decommissioned plants have been deconstructed, and you can't turn those back on. So I think, reversing the policy and doing everything you can to extend the life of existing power fleets that are nuclear-based is key. The other I would say is, again, natural gas is an important element of the global supply chain, and pipelines are going to be critical, LNG is going to be critical. And then I would also say batteries plus or minus solar. With the new battery technology that's coming online that's long duration, going from like 2 hours to 100 hours, if you can put those at multiple nodes across the grid, you've now strengthened your grid in a very distributed way, as long as those are, affordable. And then again, I say with or without solar. I think in the past the mantra was solar plus batteries. I would say batteries plus or minus solar.
Thank you. Philip, please, briefly.
In the long term, I think nuclear is a pretty good option, but from what I just said, I don't really see any alternative than to have the Russians or the Chinese build nuclear power stations in Europe. I just don't see any alternative. Even if Europe want to get in on that game themselves, if you came to me and you said, forget about the politics, how do you do it? Bring in the Russians and the Chinese and learn from their engineers. There's no other way that I can see to do it. The only alternative is to start with these insanely high-cost reactors that come over time, over budget, and throw them at the wall and do them over the course of 10 years until you get used to building them. And I think we're too far out for that. So in the long term, that's what you need to do, and it's going to be really politically controversial. And the short term is politically controversial too, in two ways. The best way, given the scale of the crisis that this Middle Eastern war looks like it's going to cause, and again, we're not 100% on that. It could stop by the time we get off this panel, and the Strait of Hormuz could be open. I'm not making any predictions. Used to work in finance, bad idea. But if it goes in the direction that it looks like it's going in, Europe's going to have energy shortages. And in that situation, the quickest thing that you can bring online is coal-fired power plants. And we have domestic coal in Europe. It's also cleaner than it used to be and everything, but it doesn't even matter beyond that, because if you have energy shortages, you just have to throw it all out. Well, here's the thing. Who builds really quick coal-fired power stations? The Chinese. 18 months. They can get one up in 12 to 18 months. The Chinese can get a coal-fired power station up. But again, look how controversial that's going to be. So first of all, you have to say, dirty old coal is coming back, and everyone's going to cry about that. And then you say, well, how do we build them? Oh, we're going to have to get the Chinese to build them, and a bunch of people are going to cry about that. But that's the situation Europe's going to be put in. I think those are the two realistic ways out right now. And actually, if the price goes up to a certain level, renewables might actually be viable, after the Iran crisis. That's a possibility too. But once you're at that point, the prices are way too high, to my mind.
The case of Hungary is very interesting because we are very, very likely to become net electricity exporters by 2030. You may ask why. The short answer, solar energy and solar panels. We were really good at implementing them, and I can tell you that we have one nuclear power plant in Paks. This is giving 40% of the energy what we produce, and the other 40% is already coming from solar energy. So if you ask me, I say Europe needs a nuclear energy solar power as well. But basically, given this, I could say that we need diversification, as many routes as possible, and we have to tap the different energy sources. We definitely need cheap energy, cheap inputs for production, for remaining competitive. And, well, we have to we have to keep a distance from politics. We have to become more pragmatic, I have to say. And we have to understand that business is important. We should forget about creating rules and adjusting businesses. We should focus on business and then creating regulation. And I think this is the healthy way of thinking. Thank you.
Thank you very much, Szabolcs. Maybe the most important key takeaways here today is that speed, security, and affordability cannot be pursued independently. And energy transition is not only a technological question, but the question of economic realism. I'm sure many important questions remain here, so now it is your chance. I mean the audiences. So please do not be too kind to the panelists here. Feel free to challenge them, put them to work. Please.
My question is, you mentioned maybe there was an initiation from the European, I don't know, leaders, Brussels, that maybe they will reverse the Russian sanctions, and maybe they will think about to get again energy or gas, oil from Russia, but you laughed and said it will not happen. And why?
Well, first thing, I never quote Keynes, but I'm doing this now. Keynes said, sanctions don't work. They hit those who impose them. And here we go. We see that in Europe right now. And I think it's naive of the political elite in Brussels to say, oh, we have now sanctioned Russia over the last years. Now that we are in demand of energy, we just stop them, and Russia will say, or Putin will say, oh, you're most welcome to buy our energy again. Exactly. I mean, you know, but the thing is, this will not happen this way. I doubt it. I mean, sorry.
So maybe in Hungary case, we can continue to get Russian energy, but the rest of the Europe, the Western Europe, will forget about it.
Western Europe was too harsh and was not diplomatic and did not think certain things through, and I think your leadership obviously had the right, well, not only idea, but the right vision of what can be done and what needs to be done, and this is the art of diplomacy. And obviously, Brussels was too arrogant on that front and not diplomatic enough. And, you know, in diplomacy, you never close all the doors. You keep some doors open. And that is what Brussels has not done. And they forced the rest of Europe, or almost most of the rest, I would say the other 26 countries of the European Union, to go through this one-way door. And luckily you did not. So this pays back.
Make arrangements with America to get us cheap energy and oil and gas. And another thing is in the UK, I heard they got own resources and they got own gas and oil. And why they are not using it, why they are not taking it out. So why they are suffering and they are rising energy prices.
That goes to Drew and
Someone please a short answer, because we are short on time.
So what I last heard was about taking Venezuelan oil and selling that to Europe.
That much oil, the liquefied oil, and the European can get cheap oil from there. We're already getting some, no?
Yeah, I mean, from what I know about Venezuelan oil, it's harder to process and it's more expensive. It's just going to take longer. So I don't know if that's a turnkey solution. I think, and I think you have to think about what is the industry, or who is the customer, right? Because there's so many different forms of energy and needs and requirements around whether it's natural gas or nuclear or renewables or whatever. So I think your question is a tough one. It's multi-layered. But I think in spite of maybe, what the media narrative is around, Trump being anti-Europe, he's not. I think he's just clearly trying to shift the balance of things. And I think America, in my view, is still very much an ally of our allies in the NATO region, and we will do everything we can to help with that.
Thank you so much, Drew. We are short on time. Excuse me. We are short on time. Of course, after the panel, please. Thank you so much. Thank you for your understanding. I would like to especially, Adam, one question, please.
If this war goes on, how much trouble are we in?
A lot. A lot. It's going to be a worse energy crisis than 1973. Okay, so where are we now and where do we go next, okay? The Strait of Hormuz is closed. It's effectively closed. They may be shipping some stuff to China if they pay in yuan. That's not clear. But for all intents and purposes, it's closed. And up until this morning or last night, the Trump administration was convinced that if they could reopen the Strait of Hormuz, everything will be fine. Israel attacked an Iranian gas processing plant, and Iran responded by attacking gas structures all over the region. I already said 1/30th of LNG supply is destroyed for 5 years in one night. So the next step is basically, how far does this go? Iran have said today that if there's one more attack on their gas fields, they will destroy every bit of energy infrastructure in the Middle East. They're perfectly capable of doing so. They've proved that. So it depends on how bad it gets. Look, if we stop where we currently are, it's just a question of getting the Strait of Hormuz open. I'm not saying that's a simple thing to do, and the US Navy cannot do it, so forget about that. There'll have to be a diplomatic solution to that. But at least there's a way forward, if you see what I mean. If there's another strike on Iranian gas fields and the Iranians launch a ton of missiles at all the energy infrastructure in the Middle East, we'll probably have ended up losing 10 to 15% of the global energy supply for a period of 3 to 5 years or something. So it could get really severe, but we don't know what's going to happen. Watch out for more strikes on the energy infrastructure. That's what to pay attention to.
Thank you for your questions. I would especially thank to our panelists. Thank you for your thoughtful contributions and perspectives. And that was it. Thank you so much.